guess the problem is valuation, and you mentioned that's obviously the lure of some of these European plays, that it's more attractive from a valuation standpoint. So in the U.S., where do you see that value? Where isn't this priced in already?
Yeah, I think if you look at the top of the market, as you said, the Magnificent Seven, there's, a lot of those stocks are pretty expensive. But if you go down a little bit into the mid-cap space, into the sort of Russell 2000, you can find some still very attractive stocks there that have this kind of consistent drivers I was talking about in specific niches. So, again, we try to get a bit under the hood. If you look in areas, growth areas like radiopharmaceuticals or, again, defense spending, you're really not paying very high multiples for pretty consistent growth. You're getting very strong free cash flow yields, which, is something we care about.
And what about the threat of tariffs? Are these innovation plays immune to the tariffs, or is that something that you need to consider?
Yeah, no, they're definitely not immune. I think it's very difficult to say at the moment how this plays out. It seems at the moment that it's being used much more as a kind of negotiating tool. Trump's obviously a deal maker, and he's using that to his advantage. But tariffs typically are not positive for trade, and they just effectively become a tax on companies. So we're very careful about that and think about where are these businesses selling into? What are their markets? A lot of the companies we invest in are based in the US, and the majority of their market is in the US domestic economy, so they won't have such an issue, but it is a concern.
Another point that I picked out of your investment report was your comments around IPO activity and the expectation that we will see an uptick in IPO activity in 2025. Why would PE and VC now be looking to exit some of these investments? Why is now the time?
I think they've been sort of trapped to some extent. The IPO activity has been very weak for the last few years, and I think there is a pent-up demand to move some of those names off the VC books and get a traditional exit, which is how those companies operate. If the market weakens again, then probably they're going to have to use more debt and just to keep that cycle moving. But we do think there's definitely demand from that side. Whether the market stays and plays ball is very hard to predict.
And are you going to be looking to get involved in some of these plays?
Sometimes, and we look at IPOs, but often they tend to be a bit overhyped, and we prefer to wait for a little bit of time and see how the business settles in. And it's an adjustment for a management team to come to the market.
Yeah.
And so sometimes that can be a rocky
Certainly. We've seen that happen time and time again with a lot of these Silicon Valley companies that have come to market. Another one of your holdings really stood out to me, and that's Eli Lilly. We're watching Novo Nordisk closely today. The stock is up strongly on the back of results. Eli Lilly has been sharing the leadership in the GLP-1 space with Novo Nordisk, but the stock is up almost 500% in the last 5 years. A lot of that has got to be priced in already. Do you think the stock is fully valued now, or is there more to run?
No, we do think there's still quite a long way to go for it. I mean, you're right, it's come up a lot. That whole shift towards these weight loss diabetes treatment drugs has just revolutionized medicine across the world, and so we're still seeing the impacts of that, and that it hasn't reached full penetration by any means yet. Also, in Eli Lilly's case in particular, they have potentially an oral drug coming later in the year, which again would add consistent, another layer to that market. And plus their pipeline of other things is interesting. They have a very interesting Alzheimer's drug that's, again, in the sidelines that we think could be significant for the business. So still more to go for.
And how long do you expect it to be effectively a two-horse race between Novo and Eli, before the other pharma companies that are trying to get a piece of the pie anyway begin to really step in?
Yeah, there's no doubt competition will come in. I mean, that's normal.
Yeah.
And I think the point is that the market grows will still grow so significantly that we can afford to have other players come in, other entrants, and the pie gets bigger, and maybe your share of the pie goes down a bit, but the overall number goes up.
All right. Graham, well, thank you so much for joining us this morning. Graham Benke, co-manager at Amati Global Innovation Fund. Ferrari in focus this morning after reporting a 21% rise in net profit for the year. The company guided for further earnings growth in 2025. Charlotte filed this report from the Ferrari factory in Maranello.
Ferrari shares were trading higher after the luxury car maker beat expectations thanks to personalization, but also a strong demand from their key market in the US. Now they see further growth going into 2025, and we discussed with the CEO, Benedetto Vigna, about the demand from customers for hybrids, but also the arrival in their portfolio of their first fully electric car.
We had the 51% hybrid, 49% ICE. 23 was a little bit the other way around. The ICE was higher. We expect 25 to be also the ICE winning over hybrid. I think it's the same story of the quarters. In Ferrari, what is important is the sales over the year. Here it's see the trend over many years, if you want. So there is always this oscillation because it depends on the customer, what they're asking for.
And look at your portfolio. There's a newcomer, an important one coming at the end of the year, your fully electric car.
The fully electric, I forgot.
You're presenting it in October at your Capital Markets Day.
Yeah.
Are you already taking orders for that car? How
No,
things
no.
are you on track for the end of the year?
We never take orders before we release. I think we are on track. We said it multiple times. And the team, we are on track on the product development. We are on track on the industrial infrastructure. If you go to the building, you see many things that will be fit in the car.
That was Charlotte speaking to the Ferrari CEO. You can watch the full interview on our website, cnbc.com. Coming up on Street Signs, earnings season heating up with Google parent Alphabet disappointing investors after missing revenue expectations and spending big on AI. We'll bring you all the analysis next.
CNBC. Live ambitiously.
In a world of uncertainty and disruption, how will your investments stay resilient? We've been navigating change for 125 years, always looking forward, anticipating risks, and trusted to manage over $1 trillion in assets worldwide. Solving for the needs of investors today and tomorrow. That's the power of Nuveen.
Ambition doesn't always look like you think it might look. I can remember reading The Economist on my lacrosse bus trips in college. I've just always been super fascinated by what's happening in financial markets and what is that telling us about where the world is going. I want to democratize access to that high-level information and help explain to every single person out there watching why what's happening in these complex markets matters for their lives today and in the future. That's what drives me. I love being part of this.
Frank Holland, Worldwide Exchange, CNBC.
The greatest thing about Squawk Box is we get to talk to some of the brightest, some of the smartest, some of the most important people on a daily basis.
Everything we ever create, it's so a person can do something they couldn't do before.
It's more entertaining than any other morning show, but you actually might get some useful information.
Generative AI has the chance to transform every customer experience.
For me, Squawk Box is breakfast with the most interesting people in the world.
You guys all have an amazing heart, okay?
Squawk Box, weekdays.
As we approach the end of the show, here are 4 things to get you up to speed ahead of the open on Wall Street. On the economic front, we'll get the services ISM and ADP employment figures out of the U.S. We'll hear from several members of the FOMC, including Richmond Fed President Tom Barkin and his Chicago counterpart Austin Goolsbee. The earnings keep on coming with Disney, ARM, and Qualcomm amongst the big names reporting today. And the U.S. Postal Service is temporarily suspending all inbound packages from China and Hong Kong following new U.S. tariffs on Chinese goods. Apple shares are seen lower in pre-market trade after a report that China is considering a probe into the tech giant's policies and App Store fees. That's according to Bloomberg, which cited sources familiar with the matter. CNBC has reached out to Apple for comment. Apple's not the only one that is down pre-market. Alphabet shares sank in extended trade after the tech giant missed on fourth quarter revenue expectations and announced further investments into AI. Revenue at the Google parent company grew 12% year on year, slightly weaker than the same quarter last year amid a slowdown in its search business as well as its YouTube ad business and services unit. Richard Kramer, senior analyst at Arete Research, joins me now. Richard, thanks for being with us. Why is the stock down? What exactly has investors concerned in these numbers?
Juliana, so you need a little context here. The stock hit all-time highs yesterday and was posting record margins. Now, the shortfall you discussed in cloud was less than 1% and 12 billion, while the street was looking for 12.1 billion. And they said they were capacity constrained in a business now generating 17% plus margins. So in that context, their decision to spend 75 billion on capex, we were at 66, the street was at 58, was surprising to the street, but not surprising in the context of the AI mania and arms race we've seen between all the big tech companies.
What color did they give around where that $75 billion is going?
So, Google has long talked about being a full stack AI company. They have their own data centers. They develop their own TPU custom chips, which most of the other big tech companies are now trying to catch up to them in that effort, and they're on their 6th generation of TPUs. They obviously have incredible research capabilities, including Nobel Prize winner, head of DeepMind. And what they're struggling with now, but not unusually for everyone else in the sector, is to turn that research into AI products and applications that billions of people are going to use, not just the heavy usage it's getting right now among the developer community.
What did the company have to say about DeepSeek?
So, they got asked a question about DeepSeek, and I think what you see in their Gemini family of models is a range of very large-scale models to very small-scale Gemini Flash models, which are suitable to run on smartphones. I don't think DeepSeek is going to change the trajectory of big tech capex spend, because a substantial portion of that is for those cloud businesses, which again are capacity constrained and have literally thousands or tens of thousands of other customers looking to access the compute capacity that they've built. So it's not just simply a matter of building a lightweight model and running it on a smartphone. There's industrial scale applications and many thousands of enterprise customers paying for what is now a $40 to $50 billion run rate business for Google, generating good profits, rivaling or trying to rival AWS and Azure.
Richard, I wonder to what extent Alphabet's fate is tied to Gemini and the AI models that it is developing. And I ask this on the basis of all the debate around the future of traditional search. Clearly, ChatGPT and the other chatbots out there provide an alternative to traditional search, and that is why Alphabet is developing its own models. But those models are surely going to cannibalize standard search. So what is the fate of the search business?
It's a great question. And look, for the past 5 or more years, the Wall Street analyst community has said, oh, search is dead. Search grew double digit every quarter this year and added $23 billion of sales. And that dropped to the bottom line to $25 billion of free cash flow for Google. So I know that it's very fashionable to say that search behavior will get completely changed overnight. Google is obviously trying to do that and cannibalize themselves with AI overviews, which consolidate search results into single multi-part answers. But bear in mind, they're the number 4 brand in the world. They have enormous distribution via Android, via the kind of deals we know that they've struck with Apple and others. And they have by far the largest corpus of search history. And again, having all of those assets to bring to bear, I think it's a little bit foolish to think that someone is going to come in and take material market share very soon against Google search. We've seen many companies try to do that, but really fail. And I think, I'm not saying that ChatGPT and Perplexity and others won't start to erode query growth for Google, but they have their own response, and Gemini is certainly one big part of that.
So we'll continue to watch Gemini. I want to ask you about China's probe into Google and how significant you think it is for the stock.
So, look, one logical reason where the stock might have fallen back from all-time highs is there are still a lot of issues out there, not just the China antitrust probe, which reflects the fact that Google Android is used on Chinese smartphones everywhere outside of China, although, inside China, Huawei, for example, has its own OS. Where you have antitrust remedies that need to get announced in the U.S. So there are certainly many risks sort of looming for Google that would prompt people to take profits in a stock that had hit all-time highs. But the wider issue for the China question right now is the advertising of China e-commerce players on platforms like Google, both in search and YouTube. It's the Android probe. It's the dampening effect it might have on e-commerce, and Google called out how strong its shopping business was in Q4 last year. So this wider China-U.S. question, as you just referenced with Apple a moment ago, is going to weigh on all the big tech stocks until there's some resolution of some sort or some steady state understanding. And I think right now we're still in the tit-for-tat PR battle over China-U.S. relations.
Richard, just finally, and this goes to your point about Alphabet coming off of record high levels. Are the Magnificent Seven overvalued? Is it simply a matter of all the upside already being priced in and now investors looking elsewhere?
Well, when you look at the weight of these companies in the market and you look at the pole of attraction that is the U.S. market for global equities, the valuations at least have been less of a concern than people trying to latch on to these businesses as growth stories and also, importantly, as large liquid assets. So it's very easy to move in and out of these Mag 7 stocks with the news flow. Whether they're overvalued, I think if you look out 3 to 4 years with these companies, the compounding of cash flow growth that they have, they start to look on much more normal multiples. The risk now is that big tech as a whole, with $2 trillion of sales, with $300 billion of capex, is just outpacing what the smaller rivals are able to do in competing with it. And they clearly, if you look at the big tech companies in advertising, for example, Amazon, Meta, and Google, have outgrown all of their smaller rivals. So it's really a question of whether these companies are going to continue to take market share,
right,
and where else would investors go outside of tech to find the kind of growth that these companies are delivering.
Richard, we'll leave it there. Thank you so much for sharing your analysis with us. Richard Kramer, Senior Analyst at Arete Research. We will leave you with a look at markets. We are trading lower overall in Europe after the rebound we saw yesterday on both sides of the Atlantic. Plenty to look forward to stateside. U.S. futures at the moment are weaker. That's it for today's show. I'm Juliana Tatelbaum. Worldwide Exchange is up next.
In a world full of ever-changing possibilities, global leaders unite to drive innovation and growth. The new CNBC franchise Converge brings together pioneers across business, entertainment and sport. Dive in as we explore leadership, innovation, sustainability and investment, and the powerful people who are uniting ideas, inspiring solutions and shaping a better future. Converge. Only on CNBC.
When you think about Singapore, it has become an innovation role model. A lot of multinational companies that have grown up here are a wonderful set of partners for companies coming in who then want to grow in the rest of Southeast Asia.
The Power Plays are here, breaking down the markets with updates and deep dives. What's moving now and what's next for your money? Sarah Eisen, Carl Quintanilla, Money Movers, weekdays, CNBC.
Kelly Evans, The Exchange, CNBC.
This is what the house looked like when I bought it.
Next on Unlocked, an abandoned old house gets a total transformation, unlocking life at sea, sun-drenched days, turquoise water, and some really tough challenges.
Way more work than living in a house.
And a bit further north, primary school teacher from Texas found happiness and a home in the world's greenest city.
Hi, welcome to our Copenhagen apartment.
Catch it all on Unlocked.
We are seeing more agility in many other territories than the European one. Luckily, the good news is that I think not only we in the foundation, but I think in general in Europe, people have woken up to that.
27 different countries, even my home country, Germany, they are way too small to have that seat on the table. And that's, I think, what the European Union missed out on, to have a joint foreign economic policy and say, look, these are the standards, those are the rules, we want to engage together for the greater good of the world, and that's missing, so that basically means that they need to get their act together quickly.
Europe is lagging in growth. The UK is ahead compared to Europe, still not as strong as the United States. But both these economies can use growth, and part of getting that growth is to unleash the capitalist instincts and what we call animal spirits into their economies, which means a better balance between regulation and opportunity.
It is 5 a.m. here at CNBC Global Headquarters. Welcome to Worldwide Exchange. Here is your 5 at 5. Big trouble in big tech this morning as two Mag 7 names. They move lower with the U.S.-China trade war hitting investors. CapEx concerns. Shares of Alphabet, they're getting hit this morning on surging AI spending. We're going to look at the impact on the futures. And they just don't get it. Jim Cramer out with what he calls hard truths for market bears and doubters of the Trump agenda. Plus, checks and balances versus Elon Musk. A look at his controversial first few weeks in D.C. And later, the chipmaker scrapping its AI outlook after months of falling short in that space. It is Wednesday, February the 5th, 2025. You're watching Worldwide Exchange right here on CNBC. Good morning. Thanks so much for being here with us. I am Frank Holland. We're going to get to the markets in just a moment, but first, some breaking news out just over about an hour ago. China is reportedly laying the groundwork for a potential probe into Apple, its App Store, and the fees the company charges Chinese app developers. China accounts for about 16% of Apple revenue. The move comes just one day after Beijing opened an antitrust probe into Google as part of its trade war with the U.S. Again, right now we have also Alphabet falling after earnings, a miss on cloud revenue and its CapEx spending. They both appear to be weighing on this stock. Quick check of both Apple and Alphabet shares. Right now you can see Apple down just about 2.25%, Alphabet down almost 7.5%. Now we want to turn to futures. Those two Mag 7 names falling in the pre-market, adding to an already rough morning on Wall Street. We're going to take a look at the futures right now. You can see in the red across the board. The S&P down about 40 points. The Dow looks like it would open about 140 points lower. The NASDAQ, the hardest hit, down 228 points, more than 1%. We want to take a look at the NASDAQ 100. Pre-market laggards right now. Of course, Alphabet is on this list right here in the number 2 spot, down about 7.5%. AMD, another earnings mover, falling about 8.5%. PDD Holdings, Mondelez, and Apple. We already hit on Apple, rounding out the bottom 5. We want to look at the leaders and right now as well. Taking a look at the leaders right here. EA, Electronic Arts, video game maker, up just over 3%. Another chip maker, Broadcom, Marvell Technology. PayPal here in the top 5. Also, Constellation Energy, rounding out the top 5 of the NASDAQ 100. This morning, we're also tracking ETFs that are tied to China, Canada, and Mexico. Of course, the three countries right now involved in some trade and tariff wars, or just, conversations, if you will, especially when we're talking about Canada and Mexico. So take a look right here. You can see the ETFs tied to China all moving lower right now. This is the MCHI. We've been following this one down about 1.75%. Similar story for the FXI. This is a China large cap stock ETF. The KWEB right here, this is Internet and Tech ETF, falling even harder, down about 2.5%. So the ETF tied to Canada up 1.75%. The Mexican ETF also under pressure, down about 1.75%. Take a quick check of the bond market this morning. Not a lot of movement in the bond market. Actually, if you take a look, bond yield's actually moving a bit lower right now. The benchmark at 4.47 this morning. Different story when it comes to gold. Gold hitting a new record high. Investors continue to pile into gold as a safety play as we see this tariff and trade war heat up. Right now, you can see gold's up 0.75%. Year to date, it's almost up 10%. Again, gold hitting an all-time high. Want to look at oil and natural gas this morning as well. Seeing oil pulling back this morning. The trade war, one of the factors. Both WTI, the U.S. benchmark, and Brent crude, the international benchmark, both pulling back about 0.75%. Natural gas getting hit harder, pulling back more than 1.5%. And we got to take a look at Bitcoin. Yesterday, we saw Bitcoin nearly hit 100,000. It's also pulled back. Right now, trading at about 97,500 a coin, down about 1.25% right now. In the last week, you can see Bitcoin down more than 6%. All right, that is our setup. Now we want to turn back to that breaking news, and Apple facing fresh pressure at the open, becoming the latest victim of the U.S.-China trade war. CNBC senior technology correspondent Arjun Kapal, he joins us now from London covering all things tech. Arjun, good morning.
Good morning, Frank. And you're right, Apple shares under pressure in the pre-market after a report that China is considering a probe into the tech giant's policies and App Store fees. The State Administration for Market Regulation is looking into policies that include Apple taking a cut of as much as 30% on in-app spending, as well as blocking third-party payment services in app stores, according to this Bloomberg report. Wednesday, China's market regulator has not decided yet whether to formally open this investigation into Apple, and CNBC has reached out to both Apple and the Chinese Ministry of Commerce as well. The European Union, remember, also looked into similar issues around Apple's App Store practices and forced the company to change some of those practices. And of course, this comes on the back of rising US-China tensions, with a number of American tech firms, including Google, facing scrutiny from China. Now let me switch tack to Alphabet, whose shares are also in focus this morning and lower in the pre-market. It's after the results. And their results really took on new meaning in the wake of the DeepSeek news a few days ago, showing efficiencies in those AI models. Going into this tech earnings season, I think the question really from investors was this: can big tech justify massive AI capex? And looking at Google results, we got the smallest beat on earnings and the smallest miss on revenue. But the market really here wanted a massive beat on both numbers. And here are the other reasons as well why shares were down. Keeping in mind what I just said about DeepSeek as well, Alphabet committed in the year $75 billion in capex, way ahead of estimates. And there were lots of focus on the cloud division, which, while it showed a 30% rise in revenue and a big jump in operating profit, still with the revenue in the quarter just under $12 billion, it was a miss on those lofty market expectations. This added to downside on the shares as well, as this is really the area where the market wanted to see a beat, particularly with that massive capex. Alphabet executives said on the call that there is more demand than capacity around cloud and AI. Ordinarily, this would have been good, but again, given the uncertainty created by DeepSeek, this weighed on the shares. There were some bright spots, however, very quickly. YouTube revenue came in just over $10 billion, which was ahead of estimates, but overall the capex, the cloud miss, and continued uncertainty around AI investment continues to weigh on Alphabet stock in the pre-market, Frank.
All right, Arjun Gopal, good to see you as always. Thank you very much. Well, Alphabet and Apple, they're certainly playing a role in the downside moves in the pre-market this morning, but as our Jim Cramer points out, the White House may be just as, if not more important, for the market's next move.
People on Wall Street, you better start taking the President of the United States more seriously, or else you're going to keep losing money. Look, you don't have to like him, but I'm begging you, listen to his words. Now, I know that the President said on Friday that he doesn't care what the stock market says about his tariffs, but that's not because he's oblivious to the market like his predecessor was. It's because the sellers don't get the plan. They're the oblivious ones. They don't get that he's trying to do something that will ultimately end up being really good for the stock market. And that's how the stock market could rally.
Joining me now is Rand Mitrione, investment management partner at the Callan family office with more than $7 billion under management. Rand, good morning. Good to see you.
Good morning. Thanks for having me, Frank.
Well, you just heard from our Jim Cramer. His point was certainly made on Monday when a lot of investors seem to be caught off sides when it came to the tariff announcements. Do you believe that the president right now, what he says, his actions, the things that he says and doesn't say, the call that he didn't have with Xi, is that the biggest factor in the market today in your mind?
I think it's no doubt driving some short-term market moves. I mean, it's the volatility we're seeing coming around the tariff commentary. Tariffs haven't been unexpected, but the reactions to it, where it's going, market trying to digest. Is this a short-term negotiating tactic? Is this going to have some kind of longer-term play that's going to be more sustainable? It's absolutely driving the markets, but we expect to see that play out, over the shorter term. And we'll see, kind of how this plays out as far as what settles in and ends up being there from a tariff perspective in the longer term.
During some of these trade tensions, the tariff war, however you want to describe it, we've seen a lot of volatility in the market. In previous months or last 2 years or so, we've seen a lot of investors go to tech for safety when we've seen volatility. With some of the things that we're seeing right now, Alphabet potentially being probed, Google potentially being probed, does that change that thesis that this trade war might actually hit those tech companies as well? And I'd also like to very quickly get your take on the Alphabet earnings.
Yeah, I mean, if this turns into a full-blown trade war and with a focus on tech, that'll be a concern. Tech has been a safe haven play. These are big companies with fortress balance sheets that that have been driving the market performance. We've seen mixed results from earnings. Overall, it's been pretty strong. The CapEx spend is a little bit, causing some concern following the DeepSeek announcement. But we've seen big tech committed to making these big CapEx spends. We saw it with Microsoft and Meta as well, that they're committed to continuing to drive their AI development forward, even in the wake of the DeepSeek announcements.
So you mentioned the consumer in your notes to us, that your consumer continues to be strong. Are you concerned that that dynamic may actually change? And does that change your view of what sectors are a great investment? What sectors you might want to stay away from? The idea that tariffs and inflation could actually hit the consumer, hit GDP, and create somewhat of an economic slowdown.
Yeah, the consumer is no doubt a big focus and really the most important factor in what we're going to see from economic growth going forward. And it's been incredibly strong. We saw, 4.2% spending in the fourth quarter and expect that to remain strong. But if we see tariffs, if we see, prices going up, more inflation, we're already seeing, some kind of credit card balances going up, some savings going down a little bit. Right now, consumer remains strong, so we're still cautiously optimistic that that's going to remain in place. But it will depend how much. If we see inflation tick back up, that will be a concern and could lead to some more softness in that area.
All right, Rhea Mitrione, great to see you. Thank you very much.
Thanks, Frank.
All right, we got a lot more to come here on Worldwide Exchange, including the fintech bet. One market watcher says has more room to run after a 26% pop over the past year. But first, a look at Elon Musk's first few weeks in D.C. and why checks and balances, they could be a thing of the past for Doge. Plus, shares of Novo Nordisk, they're surging on massive demand for its weight loss drugs, but the CEO is telling CNBC about the year ahead. And then later, much more on Alphabet and why Morningstar says today's sell-off is actually a buying opportunity. A very busy hour still ahead when Worldwide Exchange returns. Stay with us.
Today's Most Active Stocks Update is sponsored by Interactive Brokers. 150 markets, 33 countries, 27 currencies. Today's Most Active Stocks Update was sponsored by Interactive Brokers. Trade worldwide from a single unified platform.
Want to make some extra money, but not sure where to start? CNBC Make It will teach you the skills to earn passive income online. Take our new online course that will help jumpstart your business idea. Get expert advice and hear real-life success stories.
Soon, you'll have the tools that you need to start your own passive income business.
Learn how to start generating additional income right now. Register at cnbcmakeit.com/passive income today.
When I did my master's, I was having a concentration in the area of artificial intelligence.
So you're secretly a tech geek?
I wouldn't call myself a geek, but I certainly am very interested in technology.
On the next Managing Agent, an exclusive interview with Singapore Airlines' Goh Chun Pong.
I think the most stressful time really during the pandemic was the initial period when we're trying to raise funds.
Looking back, would you have done anything differently? More of my interview on the next Managing Asia.
Can't miss reporting that impacts your money now. Be here when the opening bell rings. Squawk on the street. CNBC. Breaking news, market moves. Scott Wapner from the NYSE. Closing bell. CNBC.
part of the reason we are so excited about the AI opportunity is we know we can drive extraordinary use cases because the cost of actually using it is going to keep coming down, which will make more use cases feasible. And that's the opportunity space. You know, it's as big as it comes, and that's why you're seeing us invest to meet that moment.
That was Alphabet CEO Sundar Pichai on the earnings call last night, talking the company's big investments around AI. Investors, however, feeling less convinced around all that spending. You can see right here the stock is sliding down more than 7%. Welcome back to Worldwide Exchange. I am Frank Holland. Coming up this half an hour, why our next guest is not concerned about that quarterly read, offering a very bullish view on Alphabet shares. But first, kick off this half an hour with a check of U.S. stock futures. Taking a look, you can see we are in the red across the board right now. The S&P down 33 points. The Dow looks like it would open about 94 points lower. The NASDAQ, the hardest hit, down about 200 points, down right around 1%. Two tech giants in focus. Breaking news this morning, China reportedly laying the groundwork for a potential probe into Apple and its App Store. Meanwhile, Google shares sliding on the back of its earnings and concerns around the cloud and its CapEx spending. Much more on both of those stories coming up in just a moment. Speaking of China, this morning we are tracking ETFs that are tied to China, Canada, and Mexico. Of course, we have that tariff and trade war going on, so take a look right here. You can see these Chinese ETFs, they are falling right now. The MCHI, the FXI, and the KWEB, all three of these in the red. The KWEB is a internet and tech-focused ETF, down the hardest, down about 2.5%. Also seeing the EWW, the ETF tied to Mexico, down about 1.75%. Want to check the bond market as well. Not really seeing a lot of movement except a bit to the downside when we're looking at the bond market. Maybe surprisingly with a lot of these tariff announcements. The benchmark actually falling a few basis points from the level we saw yesterday, right now at 4.47. However, a lot of movement in the commodity market, specifically gold. Gold hitting a new all-time high. Investors just piling into gold as a safe haven with a lot of these trade tensions going on. Gold up about 0.75%. You can see year to date it's up just about 10% as well. Also want to take a quick check of oil and natural gas. We've seen that move lower throughout the morning. So we're seeing it right now. WTI and Brent crude both down about 0.75%. Natural gas a bit harder hit, down about 1.5% right now. And a quick check of Bitcoin. We've seen Bitcoin under some pressure as well. Right now, Bitcoin trading at about 97,985 a coin, down about 0.75%. Over the last week, Bitcoin falling about 6% as well. Okay, that is your setup now. We want to turn back to that breaking news on Apple and China reportedly looking at a potential probe of the tech giant over its App Store there. The stock under some pressure this morning as a result of that apparent development. You can see Apple shares down just about 2.5%. Our Eunice Yoon joins us on the CNBC Newsline with much more on this story. Eunice.
Thanks, Frank. Well, Chinese regulators, as you said, are reportedly considering launching an investigation into Apple for anti-competitive practices. Now, Bloomberg is reporting this. CNBC reached out to Apple and the government, but so far did not get a response. The issue is Apple's policy that requires the company get a cut of as much as 30% of all revenues of the transactions on the apps on its platform. This has been a long-standing point of contention between Apple and its partners, as well as the government. In fact, late last September, the Global Times, which is a Communist Party paper, had described it as the Apple tax and called it a monopoly that would be unfair to consumers. Now, this comes as Apple has been struggling to maintain its market share in China and is also seeking government approval to bring its AI services into the country. The report also comes as China and the U.S. have entered another round of trade disputes with the Chinese government just yesterday, announcing tariffs and then taking actions against U.S. companies such as Google for Trump's increase of tariffs. Frank?
So, Eunice, a question for you. Before, or yesterday, I should say, we thought that President Trump and President Xi were going to have some type of conversation about the tariffs and the trade war. And then we saw the president say, well, he's actually in no rush to actually talk to President Xi. When you're there in China, what's the response to the idea that the president, quote unquote, no rush to talk to President Xi? And is there a sense that this is simply retaliation? This probe did start before the Trump administration, but is there a sense this is just a response to that, what some people may consider a snub?
I think the sense here is that the both sides are raising the stakes. That President Trump had, the two are expected to be speaking in the next couple of days. From President Trump, we heard that the U.S. Postal Service is no longer going to be receiving packages, small packages from China or Hong Kong. And then this comes after the president had also closed a trade loophole that does affect a lot of small-time retailers here. So the way that this is going, where we see these tit-for-tat actions on both sides, is leading people to believe that both sides are raising the stakes, as I said, and that eventually this could mean that we would see a broader economic discussion.
Arjuna Shun, thank you very much. Good to see you as always. All right, turn our attention back to tech and to Alphabet, dropping after the company's fourth quarter earnings beat. But the company also missed revenue estimates. Google Cloud revenue also falling short as growth slowed to 30% from 35% in the previous quarter. Remember, Microsoft also reported weaker growth for its cloud business just last week. Alphabet has been spending heavily to build out its AI infrastructure for search and for cloud, and that will continue this year. It plans to spend $75 billion this year. That is 30% more than Wall Street expected. That includes up to $18 billion this quarter. Let's get more on this with Ahmed Khan, equity analyst at Morningstar. Good morning. Good to see you.
Good morning, Frank. Good to be here.
So I want to get your reaction to the quarter, and also you have a price target of $237 for the stock. Your peers, the consensus is about $216. Are you still more bullish than the rest of the street? Any sense of a change in how you view this company?
For sure. So we are more optimistic or more bullish about Alphabet's outlook when it comes to actually monetizing search. We continue to think that Alphabet's full stack. So you have the infrastructure, you have the applications, you have advertising, you have software, all of them being enhanced by AI is going to be a big opportunity unlock for Alphabet.
All right, so I want to get your take on the CapEx spending, $75 billion. It was considerably higher than the street was looking for, more than 30% higher. Is this a situation that we're seeing? We saw this in Meta a few quarters back. Are investors dinging this stock because of this CapEx spending? Have investors finally said enough is enough? And do you think DeepSeek is playing a part in that?
So I'll just say that two things work together. So let's say if Alphabet's report had come out and Google Cloud had continued to accelerate, and then the CapEx bill was the same as what we saw, or the expected bill rather, I don't think investors would have sold the stock off. I think the worry is that you're increasing CapEx while Google Cloud decelerated, so that creates for an uncomfortable situation for investors to be in. But again, as I said, I mean, AI monetization is not going to come only through Google Cloud. I mean, Google Cloud, one thing I would say is that the decel in Google Cloud itself has GCP, which is the actual cloud infrastructure business, and then Workspace. And you can imagine Workspace to the productivity suite that Alphabet has would be growing at a much lower growth rate than the actual cloud infrastructure business. So I think we think there's more than meets the eye.
All right, so more than meets the eye. One other area a lot of people are looking at when it comes to Gemini and also Alphabet's Vertex AI, it's their developer platform. What kind of adoption are you seeing there? There was some sense that Alphabet was a bit behind when it came to the AI race. What's your take now after this quarter?
So first of all, from the onset, we had the position that we did not view Alphabet as an AI laggard. So a few things that I'll say on that is, like, I mean, if you look at Google search, it was not the first search engine. YouTube was the first digital video platform. Chrome was not the first browser. So the fact that Google or Alphabet did not have like a ChatGPT equivalent in November 2022 did not sort of like demerit the entire sort of AI approach the company has built up from our perspective. In terms of the actual traction or adoption with users, I think the developers building on Google's AI platform more than doubled over the last 6 months. If you look at various third-party leaderboards for large language models, Alphabet has 3 out of the top 5 LLMs on the market right now. So all of these things clearly show that Alphabet has the AI chop.
All right. Ahmed Khan, we have to leave the conversation there. Your price target on Alphabet, $237. Alphabet shares under quite a bit of pressure after earnings. Thank you for your time. All right, we're going to turn to some more big money movers this morning. Let's get going with it. Chipotle shares, they're under some pressure after disappointing with its same-store sales forecast for this year and some comments about weaker traffic last month. Earnings did top expectations. The company's also downplaying the threat of potential Trump tariffs on Mexico, saying it only gets about half of its avocados from that country. Shares of Chipotle, they're down more than 6%. Shares of AMD, they're also just under some pressure this morning. Profits topping expectations, but data center revenue, that missed estimates. AMD did not break out a specific revenue number or forecast for its AI chips, as it has done in previous quarters. AMD shares, they're down more than 8%. And Snap shares, they're jumping on better than expected profit and revenue climbing 14% from a year ago. The company did issue a disappointing forecast for its first quarter, however. Shares of Snap, they're up just about 3.5%. And as we had to break, a market flash on PDD Holdings, parent company of Chinese e-commerce giants Shein and Temu. Semaphore reporting the U.S. is considering adding the retailers to a forced labor list. The report adds the Trump administration has not made a final decision on that matter, and they could ultimately decide against that designation. Both companies have denied the use of forced labor in the past. Taking a look at shares at PDD, down nearly 6%. We're back right after this.
CNBC. Live ambitiously.
Delivering alpha.
Getting the highest return on your investment.
Our goal.
Provide our viewers, listeners and readers with the smartest ways to navigate the markets worldwide.
We analyze alpha opportunities
by speaking to top investors with a proven record.
Getting the highest return on your investment.
Stocks to fixed income, ETFs to alternative asset classes.
Where will the next great alpha opportunities come from?
And how can you make sure you're ready?
Delivering alpha, coming soon to Squawk Box.
Standard Chartered Global Private Bank, where your life's work lives.
Master the art of salary negotiation.
Everybody who walks into a salary negotiation is nervous.
Salary negotiations are really awkward.
The number one soft skill is flexibility,
preparation,
confidence.
Learn how to negotiate a higher salary with CNBC Make It's new online course.
I'm going to give you a roadmap for doing the hard work.
Because ultimately, if you don't fight for yourself, nobody else will.
Register right now at cnbcmakeit.com/salary.
This is a good global debate.
There is no place in the world where we get the kind of access to so many amazing interviews.
To be able to solve problems at a scale that nobody's ever imagined.
This industry is going through its renaissance.
How big a game changer is this?
Let's go.
welcome back to Worldwide Exchange. One more quick check on U.S. stock futures. You can see we're in the red across the board right now. The S&P down just over 0.5% or 33 points. The Dow down about 81 points, just under 0.25%. The Nasdaq hardest hit, down nearly 1%, more than 200 points. Two tech giants weighing heavily this morning between China's reported preliminary probe into Apple and Alphabet. It's had a pretty rough Q4 report. You can see both of those stocks down. Apple down more than 2.5%, Alphabet down more than 7%. With that, let's bring in David Katz, Chief Investment Officer at Matrix Asset Advisors. David, good morning. How are you?
Nice to be here.
I want to get what your take on what how you see the Apple and Google, or Alphabet, I should say, under quite a bit of pressure in the pre-market for two very different reasons, but in general, tech under pressure right now.
Well, it's going to be a difficult year in terms of lots of headline risk. Apple is a good example of that. Trade wars are a tough thing. This is one of China's retaliations. We would not get overly concerned about it. We think Apple is well positioned for the year. If the stock were to sell off anything more meaningfully, we would probably step in and start to add to that position. In terms of Google, they had a good but not great quarter. The market wanted great. The market is really emotionally charged and very momentum driven. Stock was up $5 before the release, then sold off significantly. We turned the sound down a little bit. The stock sells at 22 times earnings, has a very good outlook. We're very comfortable with their significant increase in capital expending because they don't have enough capacity for AI. So we think it's smart investing. 22 times earnings, we like the stock. We would buy anything under 190, we think is a good entry place for the stock. So don't get too caught up in the day-to-day volatility on these names.
All right, anything under 190 right now, the stock trading about 191.75. I want to get your word of the day. How do you see today shaping up?
The word of the day is guarded. It's going to be a tough year this year. We would be a little bit more cautious about the market. We would buy into any significant weakness. We would not chase the rallies.
So you're saying you don't want to chase the rallies right now. What do you think about some of the volatility that we're seeing related to the tariff and the trade war? Yesterday, we saw the markets moving higher on the thoughts that the president and the Chinese president would have some type of conversation about tariffs, and potentially we could see another one of those 30-day pauses. That didn't happen. President Trump says he's in no rush. Does that concern you about investing in this environment right now with that, potential for volatility?
No, we think you have to expect that volatility. This is going to be a complicated year as the administration implements a number of their programs. One thing that you can see clearly about Trump is he changes his mind. There's no predictability. So we think if you try to trade around it, you're going to lose your mind. We think you have to have a longer-term perspective. We think ultimately the year is going to be okay, but not nearly as good as last year or the year before. If the market does 9%, that'd be terrific. And what that means is if the market's up 8%, don't chase that rally. When the market sells off because of trade concerns, we'd buy into that sort of weakness.
All right, with that in mind, David, what is your pick for us today?
Pick of the day is PayPal. They had a good but not great quarter yesterday. The market had some disappointments on certain things. They upped guidance. They beat the numbers, yet the stock sold off about 12%. We think if you look through the short-term noise, and there's a lot of short-term noise, they have a really good CEO. They have a turnaround plan that's working. Stock's at 15.8 times earnings. They're buying 8% of the stock back. All really good things. We think if you buy the stock on this significant sell-off, that by the end of the year, the stock easily could be $90 to $100. We think this is a great entry point.
We talk a lot about financials potentially being a safe harbor. A lot of banks have put out notes about that. Do you count this also? I know the stock's down about 8% year to date, but do you count this as a safe harbor and also a potential beneficiary of less regulation?
No, we wouldn't look at it that way. We look at it more as a technology company. So it is going to be volatile, but you're buying it at the lower end of its range. In terms of financials as a safe harbor, we've been on with you a lot over the last few years. We like financials. We've done very well with them. We are less enthusiastic about them now. We think they'll do fine. Fundamentals are good, less regulation, very good. But in a volatile stock market environment, they do tend to be volatile. So we like our financials. We don't think you want to jump in both feet with new money and financials right here. But we do think they're going to have a fine year.
All right, David Katz, your pick for today, it is PayPal. Thank you very much. Great to see you as always.
Absolutely. Have a great day. Thanks.
All right, here's what to watch today. We get economic data, including weekly mortgage apps and ADP employment figures. Several Fed bank chiefs, they're also speaking throughout the day, and the earnings parade, it just continues with results from Disney, Ford, Uber, and Qualcomm. And then on the back of earnings, Uber CEO will speak with Squawk on the Street coming up at 9 a.m. Eastern. Also, we're going to have Ford's CEO. He's going to do the same thing. speaking with Closing Bell Overtime in a first-on conversation at 4 p.m. Eastern Time. And before we let you go, one more quick look at the futures. We've been mentioning all morning long in the red a potential probe by Chinese regulators on Apple and also earnings from Alphabet weighing on the futures right now. You're seeing the S&P down about 31 points. The Dow looks like it would open about 80 points lower. The NASDAQ, the hardest hit, down nearly 200 points, nearly 1% lower. Quick check on Apple and Google as well, both under quite a bit of pressure. That does it for us. Squawk Box starts right now.
Good morning. President Trump announcing a proposal for the U.S. to take long-term control of Gaza. We will take you live to Washington, D.C. Alphabet shares falling after revenue missed the street's expectations. The company also announcing plans for a spending spree. We have the details straight ahead. And Apple shares also falling after a report said regulators in China are considering a probe of the company's App Store practices. It is Wednesday, February 5th, 2025, and Squawk Box begins right now. Good morning, everybody, and welcome to Squawk Box right here on CNBC. We are live from the NASDAQ market site in Times Square. I'm Becky Quick, along with Mike Santoli and Robert Frank. Joe and Andrew are off today. Gentlemen, welcome.
Good to be here. Good to be here.
Looking good in the suits across the board here. Let's take a look at what's happening with the U.S. equity futures at this hour. You'll see right now there are some declines at this point. Dow futures off by about 80 points. S&P futures down by just over 30 points. The NASDAQ down by close to 200 points. This does come after the markets, all three major averages, saw their first positive session in the last three. We'll continue to watch, see what's happening with some of these things, but obviously some of the pressures that we've seen with these technology shares overnight, adding pressure especially to the NASDAQ.
Alphabet for sure, AMD as well.
Too.
And so, a little bit of a setback. We actually did a round trip week to date. Monday, trade concerns, S&P down 0.75%. Yesterday, up 0.75%. Almost landed in the same place we closed last week.
Never mind.
But it's been this kind of, it's been this kind of low conviction, kind of apprehensive range that we've been in, waiting for the next headline with an undercurrent of decent earnings facing high expectations.
Volatility hasn't been too strong. 17, I think, was where the VIX was yesterday.
And which, if you think about it, imposing China tariffs at 10% on its own, if that had just happened in isolation without all the other stuff, you wonder whether the market would be sort of
more
consistent with it. But to think that the market is holding in there with the 10% tariffs on, now it's better than people expected, and so maybe there's a bit of a relief rally.
I think there's also the expectation when you saw Canada and Mexico, those tariffs go away before they even started. I think there's the expectation that there will be conversations with President Xi, and maybe that things will amp down, not amp up. But we'll see.
We'll see. Because today it doesn't seem like it.
Right. And also, just hats off to Squawk Box and you Monday. Kevin Hassett, you and I had the same reaction to his interview. When I saw that interview, and hopefully when traders saw that interview, and they did, I just thought, wow, this may not happen. If I were able to trade stocks that morning after hearing that Kevin Hassett interview, I would have bought, because it was clear to him that those phone calls were coming up later that day. And he was already saying, well, there's already been progress.
From
Mexico, that was a very
right.
different message from what we'd been hearing over the weekend from President Trump and others.
It was a different conversation than I expected to be having with him that morning. Kevin obviously is an economics advisor, or an economic advisor, and you would expect that he would have been talking the economics tariffs, and that was not what he wanted to talk about.
Yeah, I mean, we've talked about this, but I mean, the administration needed the emergency powers, and they had to say there was an emergency about fentanyl to actually do anything.
Yeah.
And also, I don't
Kevin
think
didn't have to.
This president, well, you kind of do if the lawyers are like, hey, this is what it's about. But I also think that, yes, it's relief that it's not about just pure aggression. Let's get the maximum tariffs out there for sure and let them stick. Yeah. But you're preserving the leverage. It's always 30 days forward. It's always there.
Yeah.
And so I don't think that that's necessarily an overwhelming negative. It's not the big swing factor for the market. But if you're an investor and a trader, you can never be comfortable that it's been set aside.
I guess the
good.
question is, absent the trade issues right now, what would the market be doing based on earnings and based on yields right now?
Mm-hmm.
It's a good question. I mean, I have a feeling it might be a little bit freer to move. And I think earnings expectations are high enough, though, that I still think you'd see all this back and forth chop. You mentioned the volatility index at 17. That's low-ish.
It doesn't feel like
because it's all this movement under the surface that's kind of canceling itself out. And at the index level, you know, the S&P 500 closed the day after the election, 59.29. It's been at the high up 3% from there, at the low down 3% from there. And we're kind of right in that zone again. So
we're basically where we were right after the election.
It's a dog on a lead, you know. It's a lot of movement, but it's not getting anywhere.
Let's take a look at the Treasury yields right now and just check out where things stand. If you're looking at the 10-year, you're going to see that right now it's sitting at 4.47. So yields have come back down. The 2 years at 4.19. We do have ADP data this morning, so we could see some movement around that as well. Also, gold yesterday closing at an all-time high, so it's probably worth checking that out. This morning at $2,893.70 an ounce, and then WTI at the lowest levels we've seen since last year, December 30th. So this is the last time that we saw a close like this. This morning it's off another 0.7% to $72.20 a barrel. Shares of Apple are sliding this morning after that Bloomberg report that showed Chinese regulators are considering whether to open a formal probe into its App Store fees and policies. The report said China's market regulator is considering an investigation into Apple's cut of up to 30% for in-app spending, as well as blocking third-party payment systems and other app stores. Apple and China's Commerce Ministry were not immediately available for comment when they were contacted by CNBC overnight. But guys, this is really interesting. Not that this whole investigation of the App Store is new. We've seen that from regulators around the globe. The timing is very unique, and it's also a way for China to do this without affecting the many, many Chinese jobs that rely on Apple manufacturing.
Well, that's the delicate balance, right? I mean, they haven't gone hard against Apple in the past, given the number of jobs there. And I think this is just sort of a shot across the bow. To America, you're going to come after us with tariffs. We've got a lot of corporations, your corporations, that make a lot of money somehow from whether it's the Chinese consumer or manufacturing here, and we have a lot of leverage.
And that China's not in a mood to just rush to a point of putting some concessions on paper and saying, let's make this go away, the 10% tariff. So it's a little bit of back and forth
than it was with both Canada and Mexico.
Meanwhile, shares of Google parent Alphabet are falling. Earnings of $2.15 per share beat estimates by 2 cents, but revenue fell short by just a bit. Two key metrics, Google Cloud revenue and traffic acquisition costs, also fell short of estimates. YouTube ad revenue beat expectations. Alphabet also announced plans to invest $75 billion in CapEx in 2025 as it continues to expand on its AI strategy. The Street was expecting about $59 billion in CapEx spending. Today's decline roughly wipes out Alphabet's year-to-date gains. This is a company that had a nice run, the stock. It looks inexpensive. The Street does not fully trust Alphabet and hasn't for a long time in terms of capital allocation, that they're not just going heavy and spending because they sort of have to. And so I think that's a little bit of the discomfort.
Yeah, and it's not the same mistrust that they had with Meta. And when Meta first shifted,
when they did the
metaverse, when they were going into that.
Exactly.
I wouldn't say it's the same, but it rhymes in some degree.
Right, especially Sundar Pichai said, look, maybe it's all wasted, but we still have to do it. I mean, that was quarters ago, but still, I think that's the discomfort. Look, they still bought back the same amount of stock last year. It's not like they can't afford it. But the cloud business, you'd want to see it accelerating if that's sort of...
And it came in tandem with them saying that their cloud revenue was not showing up in the same way that they had anticipated. Right. You're not seeing as many of those new smaller players that are then transitioning into the cloud.
You also wonder whether DeepSeek has made investors a little less patient about, okay, you're upping your CapEx by 30% up to $75 billion. Sure. Okay, we're fine with that, but we are also aware of these cost pressures that are coming from the low-cost provider in China.
Search and YouTube are still all the earnings, basically. So
YouTube came in quite strong, and that was kind of surprising that ad sales on... I mean, we hear all these things about the ad market right now, but YouTube was strong.
No, they're winning. All right, well, shares of chipmaker Advanced Micro Devices are falling as well. Earnings of $1.09 per share beat estimates by a penny. Revenue also beat. AMD's most important unit is its business that sells chips for AI data centers. AMD reported $3.86 billion in data center sales. That was up 69% year over year, but did fall short of expectations. Current quarter guidance was roughly in line with expectations. You see the stock down about 8.5%.
All right. Meanwhile, President Trump proposing a new Middle East peace plan involving taking long-term control of Gaza and rebuilding it to the Riviera of the Middle East. Eamon Javers joins us now with more. Eamon.
Yeah, good morning, Robert. President Trump made a surprising suggestion last night during a press conference with Israeli Prime Minister Benjamin Netanyahu. The United States, he said, should take over the war-torn Gaza Strip, where Israel has engaged in a bloody war with Hamas for more than a year, and redevelop it into something like a seaside resort. Here's what he said.
The U.S. will take over the Gaza Strip, and we will do a job with it, too. We'll own it and be responsible for dismantling all of the dangerous unexploded bombs and other weapons on the site, level the site and get rid of the destroyed buildings, level it out, create an economic development that will supply unlimited numbers of jobs and housing for the people of the area.
Now, Trump said he sees the area as the Riviera of the Middle East and that developing it would create thousands of jobs. He also said American troops could be involved to control the area if necessary. Standing beside Trump, Netanyahu confirmed that Israel and the U.S. are in talks about the idea and said, "I think it's something that could change history." The Gaza Strip includes 25 miles of Mediterranean coastline and a territory that is one of the most densely populated in the world, home to an estimated 2 million Palestinians. Trump's proposal seemed a sharp departure from his tone on the campaign trail, which was sharply critical of U.S. military and diplomatic involvement in the Middle East. But members of the Trump family, guys, they've eyed the real estate potential of the area before. Trump's son-in-law, Jared Kushner, said last year that Gaza's waterfront property could be very valuable. And we got a reaction from Hamas leaders overnight as well, guys, saying that Trump's comments represent confusion about Palestine, and they say that this is simply not something that's going to work. Back over to you.
Yeah, Eamon, what would legally, I mean, how would this work? Was there a discussion, I know the details were scarce here, but of buying it, of just taking it over? I mean, what would be the mechanism through which the U.S. gains control, or was there any discussion of that?
I mean, there's no underlying detail here, Robert. I mean, this is the president throwing out an idea there. I mean, you could see from just the clip that we just played, he was reading these comments off of a prepared script that he had in front of him. So clearly there's some thinking that's gone into this, that, this wasn't just totally off the cuff. But we didn't get any background details from the White House in terms of exactly what, how this would work. What the president said is the U.S. would simply take over Gaza, presumably because the Israeli military has cleared out resistance and bombed out enormous amounts of territory there. The question is, who would legally run that? Would that be sanctioned by the UN? And then what would Hamas say about that, right? I mean, obviously, this is a hotly contested piece of land, has been for, basically forever. The amount of resistance that we would get there would be epic. The reaction on Capitol Hill overnight, people were sort of agog over this, looking at it and saying, how would this even work? This seems like a non-starter. But the president is a real estate developer, and he sees things in those terms.
Yeah, it's the 51st state of Canada, it's Greenland, it's Panama, it's now Gaza. He likes land. He likes buying and owning more land.
Yeah, it's interesting, though. I mean, this is an isolationist president, right, who ran on the idea of getting out of the Middle East, not getting the U.S. involved in forever wars. And then here he's floating the idea of American troops in Gaza, which is, one of the biggest flashpoints on planet Earth. And you can imagine, if Baghdad was difficult, Gaza would be, percentage more difficult than that in terms of a military campaign. It's at odds with sort of his whole approach on the campaign trail as well.
Yeah, and it's at odds with, you would think, even the conversations he has had with Saudi Arabia. MBS has been a close ally in the past of the Trump administration. Just a little strange to think of, and I've been trying to go around and round, figure out what they could possibly mean by this. In your most generous assessment of it, you could try and think of a Marshall Plan, but this is not that, because he has said he would remove the Palestinians and go in and actually potentially send U.S. troops in. So it's very different from that perspective. Obviously, there's something that needs to be done in Gaza post the Israeli invasion and the damage that's been done there, but this is very different from the Marshall Plan after World War II.
Yeah, I mean, the immediate criticism you heard over the night last night was that, you know, this is ethnic cleansing, right? I mean, talking about removing the entire population of Palestinians and replacing them basically with tourists at a Mediterranean resort. You know, that's not a great look. The president didn't say, though, that he wanted to remove all the Palestinians. In the plan that he kind of teased last night, he said that world people, meaning people from everywhere, would live in Gaza once it's been redeveloped, along with Palestinians. But he also seems to envision removal of a large number of Palestinians. Remember, there's 2 million people crammed into a very small area there. He seems to envision removing a large percentage of that population to other Arab countries throughout the region. Those countries have signaled that they don't want to take those populations. So it's not clear, you know, where those people would go. Trump simply making the argument that Gaza is bombed out and destroyed and really uninhabitable right now, and the Palestinians should, he said, want to go somewhere else. You know, I think that's going to be a question for the Palestinians, right? I mean, you know, ask them where they want to go and what they want to do. But clearly, you know, if you're going to turn this into a Middle Eastern, you know, Mediterranean
I don't think they want to go anywhere. That's been the point.
The Palestinians might want to own it, right? I mean, you know, what's their equity stake in this new deal?
Yeah, Eamon, so complicated. Not going to be an easy real estate deal, even for Trump. Eamon, thanks so much for the update. We appreciate it.
You bet.
All right, coming up, earnings and jobs data on today's agenda. The Squawk Planner is next. Take a look at futures. Under some pressure, S&P 500 down just around 0.5%. And later this hour, Congressman James Comer is chair of the Oversight Committee. He'll join us today ahead of this morning's hearing on right-sizing government. Squawk Box will be right back.
CNBC. Live ambitiously. Live from the New York Stock Exchange. Halftime report. CNBC.
Ambition to me is the American dream. It's why my mother came over from Taiwan. It's why people watch CNBC, because they want a better future. I was working as an analyst in Shanghai when my company landed in the news on accusations of espionage. I decided right there and then that I wanted to be on the other side reporting on the news. I love bringing transparency to complicated topics. I think it's so important for us to deliver the right numbers to our audience so they can make better investment decisions. San Francisco was built on ambition, a belief that anyone can disrupt any industry and change the world.
Geopolitical stability, I think, is good for growth. It's good for peace.
Our principles are very clear. No agreement on Ukraine without Ukraine.
It is impossible to keep NATO safe, the whole NATO territory safe. Yes, for now, yes, we can do that, but not in 4 or 5 years.
The risk is to the downside when it comes to growth, and we'll have to be very attentive to the data.
The structural weaknesses of our economy absolutely have to be addressed.
I wouldn't have been as successful as I was without my team. And I take that throughout my whole career, and I take it into my business life as well, and also with my family. It's all about my team for me.
The climate crisis is a gun to our head, so we better get our act together.
We meet those at the forefront of creating a sustainable future.
Our work has been accelerating, and we've now hit 43.7 million people rather than kind of traditional charity. It's more about empowerment.
Climate change is like the internet. It gets bigger every year, it never goes away, and you have to learn to make money from it.
In the last 10 years, we've seen a very encouraging sign of much more products coming online into the market in terms of green and sustainable products.
An issue that affects every generation.
These kids, it's great they're fighting for their right to have a planet to live on. You've got to scream to be heard. You don't just sit politely and go, oh, I can have a conversation about pollution, please.
Soil is not our property. It's a legacy that's come to us from previous generations. It's very important we pass on living soil for future generations.
There is hope for the future.
but only if we take action, and take action now.
Join the sustainable future, only on CNBC.
hearing today on Capitol Hill focused on right-sizing the federal government. Joining us right now is House Oversight Committee Chairman James Comer of Kentucky. And Chairman Comer, I know that you're going to be listening to a lot. What are you kind of going into these hearings thinking ahead of time, just in terms of what needs to happen at the government level?
Well, we can't continue to have $2 trillion deficits. That's unsustainable. And we have a president now that's serious about trying to get unnecessary spending under control. It's easy to increase spending in this building here in the Capitol, but when you talk about making cuts and people start losing their minds, I think we have a population and a society that is addicted to government spending. But unfortunately, we're going to have to get that under control, and that's what we're going to talk about today. We're going to talk about a lot of the stuff that Doge and Elon Musk have been proposing. We're going to talk about a lot of the executive orders that President Trump has been signing, and I'm sure it'll be a very lively discussion because, to be quite honest with you, the Republicans on the committee are very serious about trying to get the backs of the taxpayers and get spending under control, and we have a lot of Democrats that just aren't very interested in making any type of budgetary cuts.
You know, I think that's really interesting. I think there is obviously bloat in the federal government. Something needs to be done, and we'd like to see that action taking place. I think the questions come down to where does the authority lie with that? Is it going to be Elon Musk and Doge that are responsible? Or are they just giving ideas to Congress, and you all are going to be responsible for coming up with some of those cuts? How does it work? I think those are where a lot of the questions lie right now.
Yeah, that's a great question, and we're going to be having a lot of debate. Probably a 6-hour committee hearing today talking about exactly that question. I think with respect to regulations, I think you're going to see the president do a lot of executive orders and reforming government agencies to try to bring some common sense back and cut some red tape and reduce unnecessary costs to the private sector with a lot of these government agencies, whether they be the Department of Energy or the Department of Labor, wherever we're talking about with respect from an agency standpoint that issues burdensome regulations, unnecessary regulations. I think the president can do that. With respect to a lot of what Elon Musk and Doge is talking about from a budgetary standpoint, then that's going to have to be Congress, and we're going to debate that today. The U.S. aid has been very controversial, but we've been very critical on my committee of that. We've asked for a lot of information with respect to where funds were going in the Biden administration. We never received anything back. We fear that there is a lot of that money that was maybe even pouring into some of the NGOs, the non-governmental organizations that were paying for the transportation of illegals and housing of illegals in the sanctuary cities in the United States. We've got all kinds of reports that much of the foreign aid wasn't actually making it to the front lines in some of the countries where they were supposed to be going to assist. So we want to look at every dollar that's been spent in the federal government because it hasn't been reviewed. You know, you look at the Pentagon's failed 6 straight audits. This federal government's out of control, and we've got to get it under control. Elon Musk has taken a lot of criticism from the left and from the media, but I appreciate that he's interested and volunteering his time to try to get government spending under control, and hopefully our committee hearing today will be able to dissect that even more and try to find real savings for the American people.
Chairman Comer, one of the things that Elon Musk is targeting next is the IRS. He's calling on his X account to audit the IRS. You talk about the spending problem, but we also do want to, I think, collect the revenue that is owed from taxpayers, right. And they've spent a lot of their money going after, for instance, wealthy taxpayers that still owe back taxes. What's your view on the IRS and whether funding should be cut there and what impact that could have on revenue?
Well, I think the IRS is needed. There will be some Republicans say to abolish the IRS. I don't know how you do that and collect taxes. But at the end of the day, I do think the IRS has a record of inconsistency. I think they have a record of targeting conservatives. We saw in my investigation of the Biden family where the 2 IRS whistleblowers came forward and you know, validated much of the claims that we were making in the committee and said they were told to stand down. But that at the same time, they were going after Donald Trump. So you had a two-tier system of thinking at the IRS. I think that the IRS needs to come in and explain themselves. I think they need to be transparent. They haven't been transparent. We know that the previous administration wanted to double the size of the IRS and double their budget, but I can tell you with certainty the IRS is one of the worst offenders in Washington from the stay-at-home policies of the Biden administration. There's still a significant percentage of IRS workers who aren't coming to work every day. They're working from home, and I don't know what you can do from home on your private server with respect to Social Security numbers and things like that. So we have a lot of questions for the IRS, and hopefully over the next few months we're going to bring these government agencies in and they're going to be able to explain themselves. I'm sure that some of the programs that Musk and some Republicans have talked about cutting, they may make a solid case that they need to continue, but I think a lot of these programs are in jeopardy, and I think that the taxpayers will be better off if we can eliminate these programs.
Chairman, I guess the question comes down to, do you have unanimity in your party in terms of some of your thoughts on this? Because it's a pretty narrow majority that you hold.
Yeah.
The Democrats have been very vocal about their concerns about what have happened with some of these issues. And look, it's one thing if Elon Musk has a line item veto and can go through it. It's a very different thing if it goes through Congress. And I'm hearing from you that you think it is Congress's place to do these things. Can you get it passed?
It's Congress's place with respect to the purse, with respect to funding the government, funding these agencies. But I think a big part of what DOGE is going to do is on the regulatory front, and that can be done through executive orders with the president. DOGE itself doesn't have any authority. I know some in the left-wing media is trying to say he's an unelected president of the United States or unelected bureaucrat or whatever. He's just a volunteer that owns a big platform that was formerly known as Twitter that's throwing a lot of ideas out there. And there are a lot of people in Congress that are intrigued by his ideas, and I think that that's great. But at the end of the day, we're going to have to come together. When I say we, I'm talking about us in Congress. We in Congress, we're going to have to come together and determine which agencies are funded and which agencies are not funded. That's a role of Congress. But again, the DOGE, I think DOGE is going to make its biggest impact on the regulatory front, and they've already made a difference, and we've already seen significant savings from their ideas.
Mr. Chairman, hasn't DOGE already effectively shut down USAID? I mean, no matter what you feel about the questionability of some of what their funding was going toward, it feels as if they've kind of dismantled it.
USAID was created by an executive order, so in the thinking of President Trump, it can be undone by an executive order. There are still worthy projects that were funded by USAID, and Marco Rubio is going to take those over at the State Department. That's a big problem with the government now. There's repetitive services. When you talk about a lot of the DEI programs, it's already illegal to discriminate. Every government agency has a personnel department, and when you created these DEI offices, you created all these new bureaucracies. So we want to look at the federal government, what agencies are duplicative, what agencies are creating repetitive services, and we're going to try to eliminate those, but protect people. We want to protect workers from being discriminated against. We want to feed countries in third world countries that are suffering from famine, but we can do that without creating agency on top of agency on top of agency, because the more agencies you have in the federal government, the less transparency you have. And we're coming off an administration, the Biden administration, that I think will go down in history as the least transparent in history. So we're just trying to get our hands around some of this runaway spending, and hopefully we'll be able to make a difference.
Congressman, we will be watching closely. We appreciate you joining us today, and we look forward to speaking with you again after these hearings. Thank you.
Thank you.
All right, Disney just reporting first quarter results. The company earning $1.76 a share. That was 31 cents better than expectations. Revenue came in at $24.69 billion. That was just ahead of estimates. Sports and experience revenue also topping what the street was expecting, but the entertainment revenue fell a little short. Disney's streaming business reported another quarter of profitability despite a 1% decline in subscribers for Disney+. The company also reported that Hulu paid subscribers came in at 53.6 million. That compares to the estimates of 52.9 million subscribers. And Disney is affirming its guidance for the full year. As a result, you can see that stock up by about 2% right now. There have been questions in some sectors about the theme parks. They actually look like they did very well. And we will talk to the CFO, Hugh Johnson. He's going to be joining us at the top of the hour. We'll talk to him about what he's seeing in the results, what the consumer looks like, and more on what's happening with the streaming wars right now. That's again coming up at the top of the hour, first on CNBC, and Squawk Box will be right back.
Today's Forex Update is sponsored by Interactive Brokers. 150 markets, 33 countries, 27 currencies. Today's Forex Update was sponsored by Interactive Brokers. Trade worldwide from a single unified platform.
In addition to hedge funds and registered advisors, Interactive Brokers also serves individual investors. We give you all the tools and technology we built for our institutional clients for free. Let Interactive Brokers assist you with your market goals. The best informed investors choose Interactive Brokers.
This is what the house looks like when I bought it.
Next on Unlocked, an abandoned old house gets a total transformation. Unlocking life at sea, sun-drenched days, turquoise water, and some really tough challenges.
Way more work than living in a house.
And a bit further north, primary school teacher from Texas found happiness and a home in the world's greenest city.
Hi, welcome to our Copenhagen apartment.
Catch it all on Unlocked.
Ambition doesn't always look like you think it might look. I can remember reading The Economist on my lacrosse bus trips in college. I've just always been super fascinated by what's happening in financial markets and what is that telling us about where the world is going. I want to democratize access to that high-level information and help explain to every single person out there watching why what's happening in these complex markets matters for their lives today and in the future. That's what drives me. I love being part of this.
Before they talk to Wall Street, they talk to John Ford and Morgan Brad. Closing bell overtime.
down 7%. It's tough out there for buyers, I would imagine.
Yes, Robert, definitely. Mortgage applications were actually mixed last week as rates really didn't move much. Demand from home buyers dropped 4% compared with the previous week. That, according to the Mortgage Bankers Association's seasonally adjusted index. Demand was flat compared to the same week a year ago. The average rate on the 30-year fixed for conforming loans decreased to 6.97 from 7.02. That's for loans with 20% down. It was the lowest level in 6 weeks, but really not a huge move. We've seen rates really not move from that 7%. Applications to refinance a home loan rose 12% for the week and were 17% higher than the year before. But the percentage increases are big because the fact is that the volumes are just so low. You see these big percentages. Now, most borrowers today have rates well below what is being offered out there. But back to buyers, demand from them is now 39% lower than it was this time in 2019 or pre-pandemic. Home sales are running at about a 30-year low, while home prices nationally continue to hit record highs. And in November, the annual price gain on the S&P Case-Shiller Price Index was bigger than it was in October. So more sellers are offering price cuts, 15.6% in January, up from 14.7% of sellers in January of last year. That's according to Realtor.com. But that's still not a lot. And the supply of homes for sale is up 25% from a year ago. New listings, though, only up 11%. So a lot of that gain is that the homes are sitting on the market longer. Nobody's buying. The average time to sell a home at the end of January was 54 days. That's the longest since March of 2020 when the pandemic was just hitting. That's according to Redfin. Now, as a comparison, supply of homes for sale is still 25% below where it was pre-pandemic. And this, guys, as we're going into the spring market.
All right, Diane Olick, thanks so much.
A lot of that has to be because people have been waiting for mortgage rates to come down, and they just haven't. So prices aren't coming down even if they're sitting there, and homeowners are bringing down their prices. It doesn't matter. All right, it is 8 a.m. on the East Coast, and you are watching Squawk Box right here on CNBC. I'm Becky Quick, along with Mike Santoli and Robert Frank. Joe and Andrew are off today. Among today's top stories, a potential casualty of new U.S. tariffs on China. Bloomberg says that the country is looking into investigating Apple and the fees that it charges local app developers. The report says regulators think those fees may be, in their words, unreasonably high for Chinese app makers. Shares of Apple off by about 2.2% on this news. Disney beating analysts' first quarter profit and revenue estimates. The company saw Disney Plus subscriber losses because of price hikes, but fewer people actually dropped the streaming service than Disney was expecting. And profitability was $100 million more for streaming than the street had been expecting. Disney CFO Hugh Johnston joined us in the last hour.
So I think consumers are looking at it and saying this is really a platform that we need to have in our household. It's kind of a must-have service. So despite the pricing, we think we're delivering enough value there as well, as consumers want to stick with us.
Shares of Google parent Alphabet also falling in the pre-market. The company missing analysts' revenue expectations for the fourth quarter. Google Cloud revenue also came in light, and CapEx spending guidance of $75 billion for 2025 would represent 47% year-over-year growth. Wall Street was only looking for an 18% increase in CapEx growth. That stock down by 7.25%, and that's a big part of the problem with the NASDAQ futures this morning, too.
For sure. Let's get to Dom Chu with a look at some more of this morning's pre-market movers. Dom.
Hey, good morning, Mike. Good morning, Robert. Good morning, Becky. Well, let's start with Uber shares. They're down roughly about maybe 4% or so right now. That's despite reporting a beat on revenues for the quarter. Earnings per share came in at $3.21, but it is not, well, the question is whether it's comparable. Right now, it doesn't appear comparable to analyst estimates. There is also a $6.4 billion benefit from a tax valuation release, which is adding to the comparability issue, so we'll keep an eye on that. But mobility delivery sales both beat estimates for the outlook for the current quarter. Bookings fell short of consensus, so on balance what you have is a 4% drop in shares of Uber Technologies. Meanwhile, Harley-Davidson shares are slipping after the motorcycle maker reported a big miss for the fourth quarter. They posted a loss of 93 cents a share compared to estimates for a 66-cent share loss. Revenues fell 35% year over year. The company's CEO said that the high interest rate environment has impacted consumer confidence. Shares have lost more than 20% of their value over the course of the past year. They're currently down 3% in the pre-market trade. And we'll finish with Capri Holdings. Those shares are down roughly 3% right now after the parent company of Versace, Jimmy Choo, and Michael Kors and other brands reported Q3 results below expectations. Total company retail sales declined in the low double digits, while wholesale revenues decreased in the low teens. Capri CEO John Idle said the company is disappointed with those results. It's reevaluating its strategic initiatives to improve current sales trends. Those shares have lost half their value over the course of the past year. Remember, Capri had been trying to merge with Coach and Kate Spade parent company Tapestry, but that deal was called off after it was blocked by the Justice Department in the Biden administration. So, Mike, Capri Holdings down about 2 3/4%. I'll send things back over to you guys.
All right, Tom, thank you. Sure. Our next guest is here to talk about the markets, but also about the second Trump administration's possible impact on fintech, the consumer, and IPOs. Joining us now is Nigel Morris, co-founder and managing partner at venture capital firm QED Investors and co-founder of Capital One Financial Services. Nigel, thanks for coming in.
Good morning.
To see you
Thanks.
this morning.
Morning.
Let's talk about this interplay of, policy, the markets, IPOs. It's interesting when you see how few IPOs there have been relative to the size of the market, given S&P's up 20% 2 years in a row. Technology's been the leadership sector. Is that because of anything going on with regulation, or is it just that the very largest companies have been where all the excitement and action has been?
Well, you're quite right that it's been actually a paucity of IPOs. In 2021, there were 61 fintech IPOs. Okay. And in the last 3 years, cumulatively, there's been 6. So it's been really not much happening there. The truth is, though, we have now a whole generation of fintechs that are now preparing for IPO. There's a number of companies that have filed their S1s. We have Klarna, we have Chime, we have Stripe that's very big that hasn't filed an S1, I don't believe. But these entities now are very profitable. They passed the Rule of 40 test. They're growing really well. They've got grown-up management teams. And I think they're all waiting now in the wings to see how the economy behaves itself over these next few days and weeks. Of course, this has been incredibly tumultuous the last 2 weeks, but I think we'll see in the first quarter the market being tested by these generation of fintechs. And I would remark that Service Titan went public 2 or 3 months ago, and their stock has behaved very well. So that's a good litmus test, I think, of how responsive the market will be.
Fintech is so interesting. I sometimes glibly say, like, either fintech doesn't exist or everything is fintech. Like Visa's fintech in some respects, JP Morgan's fintech. What do you mean when you suggest that there's some separate subsector called fintech?
You know, the way I think about it, Michael, is that you've got incumbents, the old traditional banks, and then you've got these innovators. And in some ways, Capital One was, I think, the first generation of breakout fintech now 30 years ago, and then followed by PayPal. But if you look at fintech, and this is a study that we've done with the Boston Consulting Group, fintech revenues added up worldwide represent $320 billion on a base of $14 trillion. So fintech, as measured by these attackers, these challengers, represents 3% of total revenue worldwide. So it's still very, very early days. And I think we're seeing, as I mentioned earlier, these companies now coming through that are real companies that have real management teams and are real threats to the incumbents.
One of the more clear potential policy movements seems to be lighter regulation on those traditional banks. I mean, that's what the market has sort of celebrated in advance. Does that change the competitive equation for these upstarts, or is it, it's still going to be kind of open season?
No, I think you're quite right. There's a very much a pro-growth environment from the regulatory front. We've seen the CFPB head move off stage and Treasury Secretary step into that role. And I think we're seeing a much more benign orientation in regard to financial service regulation. A CEO I was talking to yesterday said the gloves are now off in the deployment of AI across financial services. The CFPB had certain reservations about what you could do with AI, which I think, by the way, is alchemy. That's magical. But we will see, I think, less friction. We'll see more inclusion. We'll see more bank consolidation. I mean, we have 4,500 banks and 4,500 credit unions in this country, and 8,950 of them are subscale. So we will see that starting to come together.
Nigel, who benefits in this new world? Is it the big get bigger and bigger because they can take the AI gloves off, they can deploy more capital towards that, they can buy smaller competitors? Is it the new startups that are going to be able to run roughshod around that? Like, who wins in this?
You know, certainly in the shorter and medium term, my take is that it is the advantage fintechs. They're smaller, they're more technologically adroit, they can build these models out of the ground really quickly, both in terms of management of their costs and writing code. The incumbents will take longer. They will evaluate AI. Then they will determine where in the organization AI will be managed. And then they will have a vendor list that the organization can buy from. And then they will start experimenting. I saw a data point just the other day that said 16% of banks in the US are experimenting with AI. Virtually every one of our portfolio companies, we have over 100 active companies worldwide at QED, virtually every one of them now is deploying AI at scale. And
So
any pitch that you hear from any company now starts with, here's how we're leveraging AI.
But so are the big banks. I mean, they're not just playing with AI. They've been investing and playing with it and using it at large scale too. Do they buy all of those startups, the fintech startups that are there?
You know, it's been, this has been an interesting phenomenon, how we've seen more fintechs buying fintechs and amalgamating them than we've seen banks buying fintechs. And I think there's a real schism occurring in the incumbents, where Capital One, JP Morgan, Citi, Chase, Amex, Fifth Third, Key, off the top of my head, are very much leaning in to looking at the fintech universe and saying, what can I buy here where I've got product market fit, I've got clear unit economics that make sense, it'll take me a long time to develop it myself, I will just buy my way in. Whereas I think the vast majority of the 9,000 banks and credit unions are still focusing on how do I buy things that look more like me and smushing them together.
But can't all these companies just tap the private credit market? I mean, when you look at IPOs, I understand why investors like you, private equity, venture capital, they want exits. But these companies, you look at the fundraisers by the big AI companies in the private capital markets, which are now a $2 trillion market, they don't need to go public. They don't need IPOs.
I think that's exactly right. We've got, over the next 2 days, I've got 15 of my portfolio companies off-site where we are putting together an IPO readiness seminar. These are companies that over the next 2-3 years, if the window's open, could plausibly go public. And a discussion there is, why would you want to go public? Here's some of the positives.
Costs, everything.
Yeah, you've got Sarbanes-Oxley. You're in a fishbowl. You are very focused on short-term earnings management. Your board will change dramatically. And the private markets are very vibrant, as you say. So I think that if we talk to our investment banker friends, they'll always tell you that it's a good thing to go public. Yeah. And of course, liquidity is an important thing, and that's been a huge issue in venture and private equity these last 3 years. There has not been that liquidity. So it's very attractive, and in the Capital One days, going up there and ringing the bell is a wonderful milestone to enjoy. But the trade-offs are more complex, and you should not automatically assume that you should go public.
All right, Nigel, great perspective. Appreciate the time today.
Thank you very much.
All right.
All right, coming up, ADP private payroll data for January. That's coming up next. And later today, don't miss Uber CEO on Squawk on the Street. They break down the company's earnings. Squawk Box. We'll be right back.
CNBC. Live ambitiously.
1,500 movie. I don't want this flight to end.
Watch the Markets Open, brought to you by Emirates.
This is what the house looked like when I bought it.
Next on Unlocked, an abandoned old house gets a total transformation, unlocking life at sea, sun-drenched days, turquoise water, and some really tough challenges.
Way more work than living in a house.
And a bit further north, primary school teacher from Texas found happiness and a home in the world's greenest city.
Hi, welcome to our Copenhagen apartment.
Catch it all on Unlocked.
Ambition to me is the American dream. It's why my mother came over from Taiwan. It's why people watch CNBC, because they want a better future. I was working as an analyst in Shanghai when my company landed in the news on accusations of espionage. I decided right there and then that I wanted to be on the other side reporting on the news. I love bringing transparency to complicated topics. I think it's so important for us to deliver the right numbers to our audience so they can make better investment decisions. San Francisco was built on ambition, a belief that anyone can disrupt any industry and change the world.
Kelly Evans with in-depth reporting of the day's most compelling stories, economic analysis, market updates, and where to find opportunities now. Strengthen your investment strategy on the exchange. CNBC.
Better than expected fourth quarter net profit this morning, but the company did forecast a sales slowdown this year. Joining us right now to talk more about it is Novo Nordisk's CEO, Lars Fjorgard Jorgensen, and our CNBC Health and Pharma reporter, Angelica Peebles. Angelica?
Hey, Becky, good morning. And Lars, it's nice to see you. Thanks for joining us on this busy morning. Now, this morning on the call, you said that you're seeing about 200,000 weekly prescriptions for Wegovy in the U.S., and that's double what you saw last year. But there's a lot of concern out there about your ability to stay competitive with Lilly and if we're seeing a slowdown. So what are you seeing, and how are you going to stay competitive against Zepbound?
Well, we have a fantastic product, and I think so far what has really been gating the market performance is the availability of supply. And of course, in the beginning of the year, you often see some formulary changes that also move the scripts a bit. So we are quite confident that as we move into the year and we'll be supplying more and more of our starter doses, we can see a nice step up in our volume and serving more and more patients. And the guidance we have given for this year also, you can say, testifies to an underlying significant ramp in our business. So we're quite confident both in the demand in the market and also our ability to supply and compete in that market.
And I want to talk about the pipeline for a second because it's been a rocky few months for you with some of the readouts that you've had. So between CagriSema and amycretin, how do you anticipate that you're going to stay ahead, and where should we really be focused right now?
Yeah, I think we had the opportunity on our just completed conference call with analysts and investors to really explain that when you have a potent biology like what we see with CagriSema, it's important to understand that you actually amplify the difference across patients. So what we see is that there are a group of fast responders that really lose significant weight loss, actually more than 25% throughout the trial period here, and many of them approaching a BMI where they're no longer obese. And then we see also a subpool of patients that continuously keep losing weight and actually have not plateaued at the end of the trial. So they need, say, longer treatment. So I'm very, very confident in the potency of the biology we have here, and we also showed some data that is actually very well tolerated from a GI side effects perspective. So CagriSema is strong, and we'll do some more data to show that. And then we've also seen amycretin in a phase 1A, 2B study. 1B, 2A study, really showing a very, very nice weight loss over a 30-some week trial period. And we hope that we, in dialogue with the agency, can find a way to move into full development of that relatively shortly. So a real strong pipeline to compete with for the near-term future. We've also just started phase 1 trial of a triagonist. So again, a next generation compound looking at three biologies in one molecule. So I'm really excited about our opportunity to drive growth in this space.
Lars, I'm curious about pricing, particularly in the U.S. If you look at the price of your drugs in the U.S. versus the rest of the world, they are, as is typical, much higher. But typically healthcare insurance plays a role in this, but look at the average price in the U.S. is $969. In France, it's $71. What do you see going forward on pricing? Could that have an impact on margin?
Well, I think it's important to note that here you're actually comparing apple and pear, so to say, because, for instance, the German price is actually on a low dose, not the high dose, whereas in U.S. it's pricing before rebates. So these are not fair comparisons. What I see in the U.S. is that pricing is coming down. It's typically seen across all categories that you launch at a relative attractive price, but then you give rebate concessions year over year, and net price moves down. And for mature products, pricing in the U.S. is actually low compared to Europe. So if you look at insulin, for instance, what government pay in the U.S. is actually lower than what governments pay in Europe. So it's a different market structure, but I think it's a known structure, and I think it works because we also bring products that drive down healthcare costs by serving some of the comorbidities that actually leads to the highest part of the healthcare cost in a country like the U.S.
And on pricing, of course, Wegovy and Ozempic were selected as part of this next round of Medicare price negotiations. You've been through those negotiations before. What did you learn from the first time around, and how do you anticipate that this negotiation will actually change the price of those two drugs?
Yeah, that's right. This was largely anticipated based on the success of these products in the market, making it one of the big drug categories. So we had all along anticipated that. And as you say, we had a prior experience with our insulins. And overall, I think we managed that quite well. It has changed a bit, say, the gross to net model for insulins. Instead of having a list price and rebates, you trade on a net price. So I think there are a lot of learnings there. And if you look at our GLP-1 business, of course, it's only a smaller part of our overall book of business that goes to the government. There's still a commercial channel. And of course, we also have the innovation we talk about. And there's still a very large volume opportunity. We're only serving today around 1.5 million people living with obesity in the US, and we have access to 55 million of those. So there's a volume and there's innovation play that also means that I believe we can handle the IRA. And as long as you're innovative and you serve big markets and untapped opportunities, I think this plays out to the benefit of patients, healthcare systems, and also our shareholders.
And have you had an opportunity to speak to the new president or the new presumptive HHS secretary? And if you haven't spoken to them, if you were able to have that opportunity, what would you ask them, or what would your priorities be?
So I have not had such an opportunity, but I have noticed that there are many similar objectives. As a company, we are investing significantly in the US. We have more than 10,000 employees in the US. We have a number of expansion programs going on. Just one announced a few months back is a $4.1 billion CapEx program taking place in North Carolina. I've also noticed that there's a key interest in say, health and dealing with chronic diseases. That's the purpose of our company. So I think we have many overlapping objectives, and we are happy to engage with any policy maker in any country in how we can join forces in achieving these, what I would say, win-win-win. Win for the patient, win for healthcare system because you forgo some of the comorbidities that are associated with chronic diseases, but also win for the economy in terms of increased economic activity level. And when you create all those win-win-wins for society, obviously we'll also be winning as a company. So I think this is a really good topic to have a debate on.
Lars, thank you for joining us today. We appreciate it. Angelica, thank you.
Thank you.
Rick Santelli is standing by at the CME in Chicago. He's got some breaking economic data. Rick, the numbers, please.
Yeah, and this is a date with history on this number. The trade balance for December, minus $98.4 billion. Minus $98.4 billion. That is the second largest trade deficit ever since we've been recording, which goes back to January of 1992. The biggest was $101.9 billion. That was in March of 22. That was the biggest. And pre-COVID, you know what the biggest deficit was? Pre-COVID, the biggest deficit was minus $68 billion. 30 billion smaller than the current 98.4 billion. Now, we're not getting a huge reaction in the marketplace because this is one of those numbers where, it just doesn't jump out at you that you need to hit the market in a certain way. What it tells me is that the globe's behavior has been modified, that deglobalization is showing up, that the U.S. is the biggest, strongest economy in the world is showing up in these numbers. So there's many ways to take it. But the way I take it is this is a big deal, and this administration, President 47, pays attention to these numbers. Now, if you look at interest rates, every single maturity today, 2s, 3s, 5s, 7s, 10s, 20s, 30s, is trading under yesterday's low yield, above yesterday's high price. If we were to close here in a 10-year, it'd be the first time we've closed under 4.5% since the 17th of December. From an intraday perspective, current 10-year yields are the lowest intraday since the 18th of December.
This is a very seminal moment if you're a technician. We want to watch which side of 4.5 a 10 closes at. And, of course, the 30-year seems to be ahead here. We want to make sure that both close under key levels. For the 30-year, that would be 4 3/4. We still have the service sector PMIs to come out at 9:45 and 10 o'clock. Stay tuned. Mike, back to you.
We will work. Yeah, December 17th, right before that December Fed meeting, let's remember. All right, the latest Treasury quarterly refunding numbers are out, closely watched by the bond market. Megan Casella joins us with the details. Megan.
Mike, Treasury is planning to auction off $125 billion in securities. That matches expectations and holds exactly in line with the past couple of quarters, so no real surprises for the Treasury market here. A few more of the numbers for you guys. Treasury says it will be refunding $106 billion and raising about $19 billion in new cash. The breakdown in tenors will also hold the same as before, so that's $58 billion auction for the 3-year, $42 billion auction for the 10-year, and $25 billion for the 30-year. Now, something I do want to flag here. Treasury also says in this release that it believes it will be able to hold auction sizes steady for at least the next several quarters. That language has been in there for several quarters now, and it's a good sign for stability in the bond market. But I highlight it now because there had been some expectation that Treasury Secretary Scott Bessent, who had been critical of Secretary Janet Yellen's reliance on shorter-term debt, could have been pushing now toward issuing more longer-dated bonds, that he would at least for now be removing that language from the statement. But Treasury says that it believes it's still well positioned to address any changes to the fiscal outlook, even while holding these auction sizes steady. So good news there. Keep an eye on some volatility today in the bond market, maybe in the long end of the curve especially, but this should overall come as welcome news for the market. Guys.
Yeah, Megan, seems to be the case. Always easier to, I guess, have strong opinions about issuance and maturity when you're outside Treasury than when you're in there. Thank you very much. Coming up, we'll go inside Elon Musk's unprecedented access to and shakeup of the federal government. As we head to a break, take another look at some of the biggest companies reporting earnings this morning and how the stocks are reacting. Stay tuned. You're watching Squawk Box on CNBC.
For the 4th consecutive year, Interactive Brokers is one of the fastest growing prime brokers and is now number 5 in Preqin's ranking of top prime brokers. Interactive Brokers serves both organizations and individual investors. To get better results, get a better platform. The best informed investors choose Interactive Brokers.
Want to jumpstart your side hustle? Learn the skills to earn passive income online with CNBC Make It's new online course. Expert advice, real-life success stories. Register right now at cnbcmakeit.com/passive income.
My ambition is to get the story and to help the viewer connect the dots, to understand the context so that we, all of us, can actually make our own judgments. Oh, I love what I do. I can't imagine doing anything else.
CNBC Tech The Edge explores the aerospace industry's use of hydrogen.
Here is the cockpit of the first hydrogen airplane, which is attempting to fly non-stop around the world with 0 emissions.
So let's talk about the aircraft itself. What are some of the key things in the aircraft's research and development and design?
All the structure has to be really light, really strong, but it's not only a plane, it's a propulsion system. And to imagine the complexity, hydrogen has to be kept in the liquid form at a temperature of -253 Celsius, almost the absolute zero. So the tank has to be really well insulated, and the little part of hydrogen that will always be evaporating, this is called the boil-off, and it will feed the fuel cells, run the electric motors, and allow to be silent, to be clean, and to be really efficient.
New this hour, the United States Postal Service says it will continue accepting all international inbound mail, including packages from China and Hong Kong. It had announced yesterday that it's going to stop accepting those packages because of President Trump's executive order targeting exemption on goods less than $800. The Postal Service now saying it's going to work with Customs Border Protection to implement efficient collection mechanism for new China tariffs to ensure the least disruption for package delivery. This was a big deal because you can imagine that Postal Service just stopped anything out of China and Hong Kong. We're not going to deliver it.
I was wondering how much my stuff wasn't going to get here. I think this is also bureaucratic confusion as to how to interpret the executive orders. I don't think this was an intentional and then said, oh, never mind, we can't do that, China's mad. I don't think that's the case. I think this is anybody you talk to in any of these government agencies are having a hard time trying to figure out how to interpret some of this, and there's going to be some bumps along the way. So I think that's just an example of this. When we come back, the future of crypto and AI under President Trump. We're going to speak with venture capitalist Steve Jang, who's backed companies in both areas as well as the broader tech sector. Stay tuned. You're watching Squawk Box, and this is CNBC.
CNBC. Live ambitiously.
The idea that you should start with the data strikes me as fundamentally wrong-headed. People love making data-driven decisions involving very little imagination because they don't involve decision-making, and you can't be blamed for the consequences. Because if you can pretend that your conclusion is driven by data, then you've met the criterion of being logical. You haven't really made a decision at all. You've just effectively arrived at a conclusion. You can pretend that you're completely logical about what you're doing, and therefore your reputation risk and career risk is very, very low. And so what we've got to protect against is for people to want to pretend that things are data-driven, not because it actually arrives at a better outcome, but simply through a kind of reputational career insurance, which is the data told me to do it. It's the get out of jail card.
Good money.
Everything will seem legit until it wasn't.
Good times.
The lavish lifestyle, the houses that they're used to.
Is never enough.
Someone who has a goofy social media presence could be laundering $4.5 billion worth of Bitcoin.
Fame, fortune, and fraud.
His stories were so good, they've all fell for them.
I believe in getting justice.
American Greed on CNBC.
Ambition is in my DNA. My grandparents came over from China to give their children a better life. They opened up a laundry in Buffalo, New York. They raised 5 kids, and they sent all 5 children to college. They achieved their American dream, so I can have mine. It's a privilege to be able to have the platform to help viewers out there make better investment choices so that they can have a better life, so they can achieve their American dream. That's what ambition is all about.
I've talked to many founders over the past few years, and they've told me repeatedly that the number one thing they need from Washington is regulatory clarity. They just want to know what the rules of the road are so they can abide by them.
That was White House crypto czar David Sachs at a news conference yesterday. During President Trump's first week back in office, he issued a goal of proposing a regulatory framework for the operation of digital assets in the United States. Joining us right now on the future of crypto in the U.S. as well as AI is Steve Jang. He is Kindred Ventures founder and managing partner. And Steve, what can you tell us so far about what you've seen from this new administration, what you like, and if there's anything that you think that you'd like to see more of?
Well, one thing you have to give them, and good to see you, Becky. Thanks for having me back on. Well, one thing that you have to give them is that they're fast. They're rolling these out in a matter of days. These proclamations and a lot of the EOs that you're seeing. I think one of the things that we're looking forward to with David Sachs in the administration as the AI crypto czar is that the low-hanging fruit, Bitcoin, stable coins, smart contract platforms, all of that, regulatory uncertainty will be settled down. I think it's been a shame that crypto projects have been offshoring outside of the U.S. to avoid regulation and a lot of the consternation that comes from it. I think a few of the things that sit on the outskirts of that, we'll have to see. I think the SEC and the administration still want to be protective over consumer investors, and so we'll see, I think, a steady balance there. But we're seeing Bitcoin, stablecoins, Ethereum, Solana, smart contract platforms that already have a lot of global adoption and a lot of industry adoption. I think those will get a little bit of the red carpet now.
It sounds like the dust still needs to settle in terms of the regulatory changes that are going to take place, but we have seen Bitcoin and other crypto move pretty aggressively ahead of this, anticipating that this relaxation and maybe standardization of regulations would come. Has all of the gain already been built into this, and now we wait and see, or how would you anticipate? Have companies come back to the United States yet?
Yeah, I think I think on the buildup, there were a lot of gains and prices across the board. So I think the market is in sort of a standstill, waiting to see what actually happens concretely. So I think you're seeing that, right? I think from a prediction perspective, understanding not only David's background but where everything is with ETFs and the adoption that we see from firms like BlackRock and Vanguard and other large investment firms and houses, is that I think there are a few things that are going to happen in 2025 to start to happen in 2025 and then continue through this administration. I think the biggest one will be that securities will be tokenized. I think that that's been a long-standing concept that has had starts and stops. But I think things like stocks, bonds, real estate will actually start to get tokenized as digital assets during this administration. And that's a huge sea change to how things work today and the legitimacy and credibility of digital assets and crypto. I think stocks and bonds and real estate going on chain is probably the biggest thing that we see at Kindred happening in this administration.
Let's talk AI and the changes not only from this administration, but maybe more substantially the changes that we have just post DeepSeek, this latest release. How has that changed things in your world? What have you seen from the companies you deal with?
Well, it's really interesting. There was a rout for about a week and a lot of discussion, not only outside in sort of Wall Street and markets, but in media, but also within the tech industry. And I think there's two schools of thought out there. One is that the speed and efficiency at which DeepSeek was trained has a negative effect on whether or not there'll be continued capital investment in things like NVIDIA chips, GPUs, data infrastructure, compute, all the pre-training inputs that you need that we've seen, many companies raise billions of dollars for. Now, there's another school of thought which says, actually, there's a paradox in economics called Jevons paradox, which says when you make a commodity more efficient, it actually increases aggregate demand of the overall, so it increases the overall size of the pie. And I think that that's I believe that school of thought is correct. So what I think is happening right now is that models are commoditizing. They're very important. They're highly valuable to AI, obviously at the core of AI. But I think value is accruing now out towards the application layer, applied AI.
Yes.
And that
Steve,
means
I hate to do this, but they're going to roll a brick right over our head. We are out of time. I would love to have you back for this, but thank you for joining us today, Steve. We appreciate it. Also, my thanks to both Mike and to Robert. We will see you right back here tomorrow. Right now, it's time for Squawk on the Street.
Good Wednesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer and David Faber at Post 9 of the New York Stock Exchange. Futures a bit soft amid some lumpy corporate earnings guidance and continued worries about trade relations with China. 10-year yield now the lowest since mid-December as bonds focus a bit on the growth implications. Our roadmap begins with the AI arms race, though, as spending continues to ramp. Alphabet and AMD delivering the latest read on the AI boom.
Plus, Apple shares are under pressure this morning. China is reportedly considering a probe into the company's App Store practices. And Uber sees its, quote, strongest quarter ever. Bookings outlook, though, perhaps seeing as being a bit disappointing, at least if you look at the pre-market for the stock. We're going to discuss all of that and a lot more with Uber's CEO in just a few minutes.
Let's begin with Alphabet today, under pressure this morning after posting a quarterly revenue miss, hurt in part by a slowdown in cloud. Company also announcing plans to invest $75 billion in capex this year. That's a big revision above street forecasts. This is what the CFO had to say about that spending strategy on the earnings call last night.
As we expand our AI efforts, we expect to increase our investments in capital expenditure for technical infrastructure, primarily for servers, followed by data centers and networking. We expect to invest approximately $75 billion in capex in 2025, with approximately $16 billion to $18 billion of that in the first quarter. The expected total investment level may fluctuate from quarter to quarter, primarily due to timing of deliveries and construction schedules.
Jim, that's about a 30% revision higher. Meta's was only 20% revision higher.
You're listening to the call and you're thinking, oh, okay, it's pretty good. And a lot of good stuff here. YouTube is really strong and there's a lot of profit, a lot of money being made YouTube, and you get very excited. And then they just drop a total bombshell about how much they need to buy. And David, when I'm listening to it, I'm saying to myself, well, what happened to DeepSeek? I thought we all were supposed to be cut. Did we all just get had on the DeepSeek story?
Well, Jevin didn't get had. He knew. He knew. The 1865 economist back in Great Britain.
Yes,
we were talking about a lot last week, Jevin's paradox.
Yes,
because
he
listen,
did.
I don't think any of us expected, and I think we said this last week, when we got the commentary from many of these companies that they would suddenly reverse their capex in some way. But I think what perhaps is a bit more surprising is the increases. You mentioned Meta's, which occurred on Friday, I believe it was, 60 to 65 billion. Microsoft, at least 80, probably 85 billion. Some say will go as high as 90 billion this year. And then you just referred to that significant increase in capex from Alphabet to 75 billion. The numbers are stunning, obviously, and they all point to potentially an overreaction, I guess some would argue, in what happened to NVIDIA's stock price. I would add to that, Jim, that Alphabet shares are going to be down in part because of the deceleration of the growth rate of cloud. 30%, yes, still a very strong number, but not as strong as it had been. But what do you make of the comments on the call when the CFO said the cloud miss is due to being supply constrained? More demand than available capacity. Doesn't that say good things for NVIDIA?
Yes, it does. It says great things. Now, what people are still concerned about is, if you notice in the verbiage, that they're going to be the first to sell Blackwell. Well, wait a second. I thought Blackwell was selling like mad. So that was a pause. Second, we have one more in this gauntlet. Will Amazon say that they're going to pause? Why didn't Alphabet say, you know what, we're in light of DeepSeek, we're going to maybe pause our spend? But they couldn't, because they're an honest company, and Nadesh Kanashi, who's the CFO, is not going to let them do that. I mean, Carl, we sold down NVIDIA because of a belief that you didn't need all this CapEx. So far, everyone has said they do. Amazon's the one that has the most that they're working on that's away from NVIDIA. But if Amazon says, you know what, we're going to need to do CapEx, then NVIDIA's going to go up rather dramatically.
Yeah, Amazon's going to be key Thursday night. Citi today, though, does trim NVIDIA to 163.
I saw that.
They point out it's been flat since June.
Right. I mean, I read through that, and I said to the guys, I said to Jeff Marks and Ben Stoto, all right, here they go. Here come the downgrades. But the downgrades seemed almost out of sync. It really was much more of like, all right, this thing's not moving, so, like, let's get away from it. It was not substantive. The only substantive thing I really found was that I keep thinking that Blackwell, which is the next iteration, is selling like mad. And to have the first customer learn that the first customer is finally taking it tells me that it's going to be much more forward and not now in front of us. But it's going to happen because, obviously, if you're spending all this money, you're going to get Blackwell. So then you say to yourself, why do you need Blackwell? Why do you need this incredibly important platform that has software? Well, you need it for both inference and you need it for training. There are people who said with DeepSeek you don't. Now, there's an outfit that I've been dealing with called You.com, and that's not Hugh Johnson, it's YOU.com. I really like You.com. And it's one of those companies that is really ahead of DeepSeek. It's way ahead. So I said, oh my God, this is going to hurt NVIDIA. And he said, well, no, actually, they're our largest investor. So, I mean, once again, you just find this. The long knives came out, whether it be China, whether it be Biden, whether it be these big hyperscalers that said, listen, we don't want NVIDIA, or we want to scale back in NVIDIA. And then something happened which just said, you know, I guess we can't. And then, you know, AMD didn't help the case. Yep. Because AMD did not do well last
No, on data center in particular, those shares are looking down a bit.
Yes,
the numbers did come in
there we
below
get a
at
full
least
downgrade out of Citi today.
what
Yeah,
the
that
street
Citi downgrade
was
was
estimating on data center for AMD. But I mean, just back to the bigger picture that we talk about often in terms of the incredible growth of data centers overall. I did think it was interesting in some of the commentary on the call from Alphabet, you know, among the world's most efficient infrastructure as well. Google's data centers deliver nearly 4 times more computing power per unit of electricity compared to just 5 years ago, Jim. And yet the numbers just keep going like that.
No, they
Power consumption, everything else. And even with DeepSeek and the efficiencies that they may have come up with in some way, nobody's pulling back on saying, great, but we need more and more powerful chips, and we need even more electricity.
No one's saying it. I keep hoping that the glass replaces copper. That some people want to do that. I keep hoping that cryogenics from Dover replaces just the typical cooling product or water cooling product. Dover has to scale. And the copper movement to glass is a very nascent one, actually led by a woman who's from NVIDIA. So I keep coming back to, well, NVIDIA's figured this out. But people want a price break from NVIDIA. They do. And maybe a lot of this was, okay, Jensen Huang, while you're off there in the Lunar New Year meeting the president, we need a better deal because this thing's rumored to be $35,000. It's not a chip. We keep using the term chip. It's a platform with software. That was another thing that people missed on DeepSeek. Platform with software, they can charge more, and you can use the current plug it into the software.
But I mean, if everybody needs it, then why cut the price? There's no real competitors.
Well,
and they all seem determined to just increase their compute capacity as much as they can. I mean, again, back to sort of the commentary.
Right.
Alphabet's cloud customers consume more than 8 times the compute capacity for training and inferencing compared to just a year and a half ago. 8 times?
No, I mean, look, when I talked with Jensen about Blackwell, I mean, Blackwell is video. I know that I talk too much about robots, and I know that. But if everyone gets a robot, which is the vision of the guy who runs Doge, then we would all need a lot of NVIDIA power because NVIDIA has robots that don't walk into walls and aren't stupid. NVIDIA has, I mean, NVIDIA, let's go back to rewind the tape about why we liked NVIDIA so much. They were so far ahead of everybody else. Well, what happened? We found out that AMD has fallen behind. We found out the hyperscalers tended to need more than they got. We did get a DeepSeek story out of China, which said that they didn't spend a lot to be able to develop this product, which I think has now been proven to be false. That's not just a Peter Navarro narrative, an anti-China narrative. There was a sense that maybe the Chinese lied.
I don't know, Jim, on that one.
I've
also heard the other story, which is, well, it's actually very close in terms of what they actually spent to what is spent to train models here as well, that the differential is not that great.
Right. Okay,
So,
differential not that great. That's a better way to put it. I mean, look, I think that when you wake up and China's doing what the Justice Department's doing to Apple, and then we freak out. when they're actually considering it, and I don't mean to jump around too much, but I do think that, but I'm hearing the music, and we didn't mention Apple. And when I hear music for people at home, that means shut up. But Apple did, when you look at what Jonathan Kanter, who's around these days, is talking from the Justice Department, talking about what they want Apple to do. Well, the Chinese communists are a little bit less aggressive than Kanter. Interesting, because I know
doesn't work there anymore.
No, he's going to work here.
Rattling around your head,
but I think what's interesting is
he doesn't matter anymore.
But Apple would tell you that they were really tough, and I would have come out and say they were tougher than the communists. The Justice Department was tougher on the communists. I want to know how many communists are in the State Department.
Oh boy, really? Back to the 50s?
Yeah, we got to go right back to the 50s. Stu, who was Stu? Stu Symington. He challenged McCarthy.
We're going to get to Apple and the degree to which they are collateral damage if this trade war heats up. Yeah. We'll talk some Uber as well. Down pre-market. Dara Khosrowshahi is going to be here at Post 9. Says the company just had its best quarter ever. We'll talk mobility and delivery. Stock is moving lower. Take a look at futures here on another busy session in the middle of this week. Stay with us.
CNBC. Live ambitiously.
We empower those who act. Those who see the correlation between predictability and probability. Those who manage risk by anticipating each movement. Flawless execution, timing, and accuracy. Identify the goal. Match power with precision. Reach new heights. CME Group, where risk meets opportunity.
The power plays are here, breaking down the markets with updates and deep dives. What's moving now and what's next for your money? Sarah Eisen, Carl Quintanilla, Money Movers, weekdays, CNBC.
I landed where I am today through a long journey that started in investment banking. I put in 7 years in investment banking to really build a foundation, the foundation that has carried me to my role now as a news anchor at CNBC. The best career advice I was ever given was to talk to people. If you want something, if you want to move around the place that you work, move jobs, change careers, talk to people and put your ambition out there. And more often than not, you'll find people who are willing to help.
Mondelez, what do you got?
Yeah, okay, so Mondelez is emblematic of what's happening here. This time, what's playing havoc with them is high cocoa prices. I thought they would come down. They haven't come down. And so what you have is you have this echo right through where you have Oreos, they have the price for the Toblerone, many different chocolates. So what happens, David, is people say, can they pass through price increases? They kind of can. And so their margins get squeezed. Very typical of what's happening at this moment.
All right, Jim, let's get the opening bell here in the CNBC Real-Time Exchange. The big board, it is real estate brokerage Compass. Our friend Robert Revkin there at the podium at the NASDAQ platform as a service via. Jim, as we watch some of the, I don't know, would you argue that the guidance this week, Merck, some of the others, EL, has been difficult or not?
Funny you mentioned those two because of China. If you have China, then you are open for question. Because people say, well, wait a second, if you take a look at Merck, did they really deny their people Gardasil, which is a terrific vaccine? And then you say, well, wait a second, maybe the vaccine problem is RFK Jr. Pfizer, I thought, had a good number. Well, what was going on there? RFK Jr. So you've got this kind of split where the drug stocks are really getting hurt. It's hard to get them moving. You do have this endless debate about how much people have to spend CapEx. Now, we've heard it from almost everybody. But I think that in general, when you get up in the morning and you see a sea of red and you think everything's going to get down, by the time you get here, you say to yourself, well, wait a second, what really went wrong? Disney was down hideously today. And I found myself saying, and David, I know you're doing this, why are they selling it? So you dig, you speak to you, John, you get back and forth, and then you realize maybe they're selling it because it's wrong to sell.
Well, what? They're selling it because it's wrong to sell?
They are looking at a particular line.
Oh,
They're
yeah, well,
in this case, of Disney Plus.
That didn't happen.
No, but Disney Plus was, I mean, there are many, many lines. And one of the things that's happened is we should tell people there might be 12 important lines. If one was bad, Disney Plus, because they decided they had a little bit more churn because they raised numbers. And then people say, well, wait a second. Netflix doesn't have churn. And all I can say is Netflix is a beast. And if you're going to go up against Netflix, you're going to make a comparison to Netflix. I mean, that's like making a comparison to the 27 Yankees.
Netflix is a beast. By the way, I'll give you another beast. And let's get back. We'll get back to Disney. No, YouTube is a beast. Getting back to Alphabet.
Absolute beast.
Shares of which are down 7%. We obviously spent a lot of time on Alphabet's quarter at the top of the hour. YouTube was not an issue, though. 14% growth there. In advertising to $10.5 billion in advertising revenue for the quarter. You annualize that, put a nice multiple on a 14% plus grower, and you're probably getting a market cap that's not that far off if this was a public company from Netflix, given those kinds of numbers. And obviously, some of the metrics are amazing. Viewers globally streamed over 1 billion hours of YouTube content every day. Every day.
So that compared to like cable companies that you know?
It's a little bit better. It's a little bit better.
Why some cable companies are the same price or lower than the last decade?
It's a little bit better. In fact, that's more than anything else. YouTube is number one in terms of that. But back to your point, Disney's numbers, were strong. They've hung in there in terms of subscriptions with a significant raise in prices, which got them to profitability and fairly significant profitability when it comes to direct-to-consumer, where they are now, I'm just going through some of the numbers here, $293 million in operating income versus $138 million loss for the year-ago period, and moving into more and more profitability. So that's significant for them. And it's not Netflix. Let's not forget that Netflix quarter, because as I said yesterday, it silenced everybody in the industry for a while, saying, whoa, my God, 18 plus million subs added globally, over 4.5 million added domestically. Everybody's like, they're out of people. How can that be possible? And yet it was. We haven't seen any growth numbers in subs from ARC, Comcast, Peacock, nothing. Disney Plus, nothing. In fact, they are pointing to a modest decline in Disney Plus subscribers in the second quarter for their outlook, Jim.
But at the same time, I think Bob Iger would say, how many ships does does Netflix have? How are the Netflix theme parks doing? Right. When they release a new movie, I mean, Netflix. I thought that the theme park, we were supposed to have hurricanes. Everything was supposed to be the gods turned on them. Obviously, we don't have the fire, so it wasn't this quarter. And I say, you know what? That's a good business. And now Netflix doesn't need it because Netflix walks on water. I mean, Netflix is incredible. But when I look at what Disney's doing, I say, geez, you know, I thought that theme parks were too expensive. Obviously not. They use Salesforce, by the way, and it's really kind of
uses Salesforce.
Disney, very big Salesforce.
Okay.
And they're getting a lot more out of an individual customer. By the way, Hugh Johnson, formerly at PepsiCo, he runs a conference call that says to me, what a pro. These guys are pros. I like that.
I'm sure you do.
Nice chat with him on Squawk this morning, where he did talk about continued consolidation, at least the number of offerings that consumers will have to juggle.
Right. Yeah.
Ex-Netflix.
And they're starting to get ready for the rollout of ESPN Plus, of their real streaming service for them. It's a tile right now, but it's obviously going to be more robust.
I'm there for that. I need to have that for my excessive gambling that I do because of Schefter.
I didn't even know that was part of the
No, I just like
days.
Schefter very much because I haven't gambled in ages other than maybe this weekend.
I did see a bright spot for the yet-to-be-named cable spinoff of Comcast.
You did?
And that was in comments from Mr. Iger as well about linear networks. Let me put this in some perspective. You may recall an interview we did in the summer of 2023, where at that time, Mr. Iger, recently sort of back in charge, raised the prospect of potentially getting out of the linear networks. He is saying things that are quite different from that period of time, more than a year and a half ago at this point. Take a listen.
We actually are at a point where the linear networks at our company are not a burden at all. They're actually an asset. We are programming them and we are funding them at levels that actually give us the ability to enhance our overall television business. That obviously includes and leans into streaming, which, let's face it, is really the future of the television business. So while I won't rule out the possibility of some of the smaller networks in some form or another being configured differently in terms of how we bring them to market, maybe even ownership, but we're not right now. We actually feel good about the hand that we have and the manner in which we're managing both the linear and the streaming businesses across the board at Disney.
Linear networks did have a decline of 11% in operating income, but still about $1.1 billion in that category, guys. I just thought those were interesting comments, obviously, and we are going to be living life in the not-too-distant future as a public company of our own on the fortunes of our linear networks.
I like the fact that 4 most streamed shows in the U.S., Bluey, on Disney Plus, Grey's Anatomy, Family Guy, Bob's Burgers. I'm not sure you know them.
I do. I know them all.
You do?
Yeah, I know them all.
Do you really?
Yeah.
Good for you. Yeah. But you're on YouTube.com. You're on YouTube, right? You're not on cable anymore, right?
I was on YouTube and cable. Now I'm back to cable, but I may go back to you. I don't know. I'm all over the place.
Have you tried that? That's why I looked at the YouTube numbers.
Different things.
That product's
I'm working
a killer.
with Spectrum every day.
I think
it's the appropriate number of
It's got
channels.
latency. It's got latency. You know what's going to happen is you're going to see Saquon run for a touchdown on cable, and then maybe 8 seconds later, he runs for a touchdown on YouTube. And that could be a problem if you're doing like intra-game gambling.
Without a doubt, which is why I'm on cable right now.
There you go.
Yeah.
Nice story. I think it's the Journal looking at the Eagles' offensive line, the tallest and heaviest in Super Bowl history.
Yeah, there's some great videos being put out that Vic Fangio, the guy who's our defense, you got to watch this video because he's just basically saying, I'm throwing these cards away, I'm throwing that cards away. What's the best piece in Philadelphia? I don't want to see arrogance. I don't want to see arrogance. I want to see hungry. I want to see let's go hunt. But there is an element which just says they're not looking at like 2022 where you kind of felt that they were in awe of Disney's now down.
Exactly.
Look at that.
That was a bad quarter, David.
What did I do?
That no one watches Bob's Burgers. But you listen to them, And in 2022, they were scared about Mahomes. Now they're just focused on themselves, and I think that's better. Howie Roseman has put the great piece about Howie Roseman yesterday. Go ahead.
Can I stop this and
go ahead.
talk about AMD
I was a little
for
more
a
than I
minute?
expected, by the way. But
Can I talk about AMD? I mean, I know you got this big game coming up, whatever it's called.
I don't care. Why don't you
even know.
explain to me Disney?
I did explain Disney to you, and I think I did a darn good job of it. Let's move on to AMD now. Why don't you explain what's going on there? Double-digit decline.
You were so good. You were so good at
decline.
Disney. Why don't you take a shot at AMD?
All right, data centers came in at a lower number than
you don't know what you're
anticipated.
talking about. Let me say, they have a transition going on to
so you're going to defend here? Is that what you're going to do?
No,
you're
absolutely not.
Okay.
No, but you can't because it was indefensible. They basically talked about how things are going to be flat, that they don't really have the right chips right now. They are doing very well versus Intel on the less expensive CPUs, but they kind of missed the cycle. Now they'll catch up in the second half, but you don't hear them in the mix. That's the problem. Because they don't have the right GPUs.
Well, here's what Lisa Su, this company's CEO, of course, had to say on the call.
Oh, you have that?
Yeah, specific to data centers. Take a listen.
Tell me that.
Data center AI business, 2024 was an outstanding year as we accelerated our AI hardware roadmap to deliver an annual cadence of new Instinct accelerators, expanded our ROCm software suite with significant uplifts in inferencing and training performance, built strong customer relationships with key industry leaders, and delivered greater than $5 billion of data center AI revenue for the year.
Well, true, but AI revenue is flat to down for the first half, and there's going to be margin dilution, which is why you're seeing this. There's an inventory build. There's poor leverage to what they're doing. This, again, cuts to you-know-who. I don't need to say it anymore because I say it too much.
Well, next month is the anniversary of the high, which when it was 227.
Well, I mean, there was a time, look, Lisa was putting up a very, very big number. She is. It took about $5 billion projection. She's making that. But what most people say is, wait a second, this is a halcyon time for what she makes, the GPUs, and she's not delivering. Now, we're going to hear, I believe, we'll hear from tomorrow. We're going to hear from ARM.
From ARM.
Yeah.
Is that tomorrow? Yeah.
Yeah. Okay. And you're going to hear ARM saying, listen, we're winning that arms race in CPUs too. So there's just a lot of them, and they have a confluence of things with Jensen. But I just come back and say Renee Haas doing better at ARM, Jensen Huang doing better in NVIDIA, Intel doing worse. But they're CPUs. And it's a product glitch, so to speak. But I think she'll be back. They're making a lot of money, but it's fallen very much out of favor, and you got to downgrade today. And I just feel that people just say, you know what, NVIDIA won. NVIDIA won another round, and the long knives are out for NVIDIA. We're waiting to hear what they're going to do with China. We know that there are a lot of people who say that Amazon is going to talk about more custom chips. Maybe that's Broadcom. But Amazon, so far, is not using AMD GPU. And that was what the customer that they really needed, and I don't see it.
Do we think the Apple weakness today is about these headlines that China may eye a probe of the App Store of their own?
Yeah, I mean, I think that they're trying to figure out what to do, the Chinese. Now, we may look at it. Now, this is something that I think if Eddie Q were here, executive at Apple, he would say, oh, my God, we just did that with Justice. Now we got to do it with these guys. But, David, when you go after something that is a really good margin business, like their service revenue, everyone just gets a little bit nervous. But the stock has been down. People are saying, well, I don't know, maybe it can stabilize here.
Yeah, I mean, that said, everybody looks at what the hyperscalers are spending on CapEx and then looks at Apple and says, maybe it's going to work out for them.
Because they're not spending anything.
Right, even though I would argue, at least at this point, their AI initiatives have not been taking the market by storm.
Not yet. What?
Is that a fair?
Be a way to do it.
Thank you.
Has anyone just watched what Meta does?
Yeah, Meta goes up every day.
Just goes up every day.
12 in a row. Longest in its history. It would go for 13 today. It's never done that before.
Well, that last quarter was beautiful. When you talk to them, you realize they figured a lot out. And I remember chiding them for thinking that Meta AI wasn't going to be number one. It is number one. Now, remember, it's more for social. Like, I'll look at it to see what act I can see when I go to the Super Bowl, and Meta AI will tell me. But if you look at it for high-energy physics, like my nephew and writer would do, because he was a Greek and Latin scholar, switched to high energy physics at Harvard. He might say, you know what, Meta AI is not for him. Because he was in the same case as Zuckerberg.
You know who the second biggest ad buyer on Meta was last month? Temu.
As
we're now watching
back to that
these
again.
Headlines from the Postal Service about
yes, no.
Yeah.
I mean, PDD was down 3 pre-market.
I think that we don't seem to know. We don't have a handle on what to do with PDD.
No. No. I guess we don't. But, I mean, Temu and Shein are huge. Remember when they sent the advertising numbers surging at Meta previously?
They're social.
They used the platform very aggressively.
Have you been hit by the Temu box? Like my daughter does some social, she suddenly gets $200 for the Temu stuff. It arrives.
No.
I'm watching the Smokey the Bear ads, and she's talking about Temu, and we're all in the kind of same boat.
Let me change and move the conversation to another name that you like, Chipotle.
Okay, so January's not so good.
This is another
earnings
story this morning. Stock down about 4%. Top line grew at 13.1%. Total revenue was $2.8 billion. And same-store sales up 5.4%. Not enough?
No, because they did talk about the future, and the future was not great. January was not a good month, a negative month. A lot of people are going to hope to be saved by the honey chicken, which is incredibly popular. But there wasn't. By the way, the costs were fine. A lot of people were worried about avocado. Turns out they sourced 50% away from Mexico. That was good. They're doing a lot of stuff behind the scenes that I think are very good to bring costs down. But I mean, Carl, when you have a weak January, people just say, "Look, what have you done for me lately?" And what have they done for them lately is not great. As much as I think Scott Buttrick's doing a good job, and what can I say? They didn't shoot the lights out of the January.
Well, you dove in on food costs and avocados.
That's what I thought was going to be the issue.
Here's what Scott told Jim last night.
Our supply chain team has done a remarkable job over the past couple of years with vendor diversification across all ingredients, specifically avocado. We've moved into other countries of origin like Peru, Dominican Republic, as well as Colombia. And today, only about 50% of our avocados are sourced from Mexico.
Yeah, that was very important because I think the big rap was, wait a second, Mexico, tariffs, what does it mean? We also got a similar thing, by the way, Mattel.
I was just going to say that.
Yeah, that Ynon Kreiz, the
avocados?
CEO.
Mattel, I know they import a lot of avocados.
Huge avocado input in the toys.
I mean, Mr. Potato Head also, but they got Mr. Avocado Head.
Although Mattel went a step further and said, we will look at raising prices, Jim.
Yes.
Although I think they only source, 40% from China.
Right, but Barbie has price.
As Mr. Potato Head,
chocolate doesn't have price. You can put through price. People talk about the people through price. Now, a lot of companies can't. I've been doing a lot of work for tonight's show. When you go onto Costco and you go onto Amazon, you find that there's a lot of products that have been commoditized, but you can't commoditize Barbie, David. Not a chance.
No way. No way. Barbie lives on.
I want you to know that.
Barbie lives
and they have a lot of movies coming. Ynon Kreiz is hitting that. They're buying back stock furiously.
It's a nice spot that Chipotle CEO joined you from. Was that his office or his home? Do you know?
Same place. I don't know. Different from.
Nice
remember that guy who used to run the SEC? He had that thing.
Gary Gensler with the fireplace.
Yeah. Well, sometimes I come in and I get the Amazon's got that fireplace on my TV.
Mm-hmm.
What is that about?
I don't know, Jim. I don't know.
That's because you don't have YouTube.
I don't have YouTube TV. Yeah, it's true.
YouTube, by the way, when Hurst does the tush push, you don't.
He just calls it the sneak.
He gets a touchdown, but on the YouTube, it's not even third down.
It's been a busy morning of data. We got ADP came in a little warm. Now services PMI with Rick Santelli. Hey, Rick.
Yes, and S&P Global, here's the PMIs. These are final reads from January's mid-month read. We go from mid-month 52.8 on the services to 52.9. On the composite, very similar. We go from 52.4 mid-month to final read 52.7. So both improved, but they both still come to the best since the end of last year, D's of 24. But maybe what's more noteworthy, these are Jan final. The last time we were under 50 was Jan of 23. Jan of 23. It's been above 50 ever since. The trade balance today was the second largest in history at $98.4 billion. And if you look at a chart, we're on pace at a 10-year to close at the lowest yield since the 17th of December, and that was basically the last time we closed under 4.5%. Squawk on the Street will return after a short break.
FEC. Live ambitiously.
If you're watching CNBC, it's because you want to get an edge, you want to get ahead. It's our job to deliver that. My ambition is just to be the best that we can possibly be. More often than not, I kind of forget that the cameras are there, but when there's really a burning question, I'm thinking about what my mom would want to hear. I'm thinking about some of the investors I know who are watching. Those are the same questions we have. People always ask me what I want to do next, and I always think they're a little crazy. This is what I want to do. It's the best job you could possibly have.
This is a good global debate.
There is no place in the world where we get the kind of access to so many amazing interviews.
To be able to solve problems at a scale that nobody's ever imagined.
This industry is going through its renaissance.
How big a game changer is this?
Let's go.
Good Wednesday morning. Welcome to another hour of Squawk on the Street. I'm Sarah Eisen with Carl Quintanilla and David Faber, live as always from Post 9 of the New York Stock Exchange. Stocks are under a little bit of pressure here. You do have some sectors that are green, like healthcare, catch up, financials, utilities, technology, real estate, but overall index down. Communication services at the bottom of the list. That's because of the sell-off in Alphabet, which right now is down about 8%. Match Group also taking it hard. Some of the media names are a little bit weaker. So it's kind of a mixed bag. Earnings front and center. Take a look at treasuries. We have had some data. ADP private sector, we'll go over that. But there's continuing to be a bid here in bonds. The 10-year yield now at 4.42. We were at 4.5 yesterday. So moving south, the 2-year yield just below 4.2. We are 30 minutes here into the trading session. Here's some movers we're watching. Alphabet and Apple weighing on the markets for different reasons. Reports that China may be targeting Apple's App Store practices. That's hurting Apple. And Alphabet down on fears about its CapEx guidance, how much it's spending. More on those stock movers coming up. We're also keeping our close eye on semis. AMD's data center revenue missing estimates. Qualcomm and ARM reporting after the bell later, but NVIDIA is higher and so is Broadcom. Mattel shares are soaring after beating estimates. The toy maker saying it expects Barbie's performance to improve this year. Big reaction there, up 17%.
Got some data today, a little bit more headed our way right now. Let's get to Rick Santelli. Hi again, Rick.
Hi, Carl. Indeed, these are the second set of service PMIs. These are from ISM, and they're not final reads. They are the January read. Expecting a headline number on the service index of 54, comes in light, 52.8, lightest since Nova of 24. Last month, a subtle revision on its final read from 54.1 to 54 even. Now, let's look at new orders, 51.3, much lower than expected, sequentially lower than slightly revised 54.4. That would be the weakest level since June of 24. If we look at the service employment, a very important number, we had ADP today. It was positive with a positive revision. Friday's the big jobs report, comes in at 52.3. It is sequentially higher than our last look, which was 51.3. 52.3, well, 52.3 would be the best read since Nova of 24. And finally, if we look at the prices paid, and this, of course, we have to look at it backwards. We don't want this one going up, but nonetheless, it is sequentially lower. 60.4, sequentially lower, much lower than the 65-ish we were sort of looking for. How does that fit in? Well, 64.4 was our last look. If we look at the Nov number, it was 58.5. You could see how it slips in, moving in the right direction. These numbers are pushing yields to fresh lows. Haven't seen these on a closing basis in long maturities since mid-December. Sarah, back to you.
Okay, Rick, thank you very much. I'll just add to the data dump today. The ADP private sector jobs report, which came out, again, not very correlated lately to the government jobs report that we're going to get on Friday, but worth mentioning because I think it shows still we're having a healthy spot in terms of jobs. So total private payrolls up 183,000. That was better than expected. And if you look at the breakdown, it's not hard to see where those jobs are coming from. They're coming from the services part of the economy. So as Rick just mentioned, services number coming in a little bit light, bonds reacting to that, but still in expansion mode compared to the manufacturing portion of the economy. So that, you know, overall, there's the breakdown. It shows you where the jobs are and not. Manufacturing subtracts, and some of the services parts of the economy still, like leisure, hospitality, do well. Also, you know, pretty solid wage growth as well. They break down how much people get in terms of a wage increase if you stay in your job, if you change your job, still pretty solid numbers there. So let's see what Friday shows. You know, the market has been a little bit expecting some moderation in job growth. We'll see what that non-farm payrolls look like on Friday. And then the only other economic data point to mention today, just because it's so top of mind, we got the trade deficit for December, so that final monthly figure, and it showed a much wider trade deficit, 98.4 billion. That was the biggest we have seen in terms of the negative number since March 2022. Why? Because everyone was trying to get ahead of Trump tariffs, and so the imports actually soared. So this is why when people say businesses should not be surprised to see this tariff announcements, and they weren't. They were planning for it because imports soared, and a lot of it was industrial equipment because they were trying to hoard and buy before prices go up on tariffs, which they were vindicated by, as we got some tariff announcements this week, even if they were delayed.
Can I ask you about the Treasury funding a little bit?
Sure. No, people were watching this closely. It came out at 8:30 because it was the first one under Scott Bessent, the new Treasury Secretary, and there was some expectation that maybe he would sell more debt at the long end instead of the short end, which is what Yellen did. But it was unchanged from when Yellen did it.
They basically maintained the same policy as the previous administration.
Yeah,
so tilted towards the short end.
At least for the next several quarters, I think was the comment. But yes, it was retained, and there is a belief that eventually he's going to weight more issuance to the long end, but didn't happen. So turned out to be sort of an unchanged number. They got to raise the debt ceiling. Remember, they're still kind of in like emergency mode on measures to try to raise the debt ceiling.
Yeah, where are we on that? Are we?
You know, we're still in these. We're still Treasury is. We've hit it, but Treasury can do special measures, as Treasury Secretary Yellen said, you know, for a few months until we exhaust that. So that's coming.
Yeah, I mean, government runs out of money in 37 days.
It's coming. Right.
And a lot of discussion this week about the House and their budget process and whether the Senate's going to try to leapfrog them, as the margin in the House is making life difficult for Speaker Johnson, at least.
Yeah, and is it going to be all in one bill? Either way, I mean, I would hate to see the drama over the debt ceiling right now. Don't expect, hopefully, that we'll necessarily see that with the Republican majority, but it's something for investors to watch. Aside from that, the trade policy is still dominating conversations, and because it's earnings season, we really got a taste of how companies are thinking about it, planning for it, talking about it. They're all having to answer about it. I mean, for Chipotle, listen to what the CFO said. Clearly, avocados are big from Mexico.
Our guidance does not include the impact of the new tariffs on items imported from Mexico, Canada, and China. We source about 2% of our sales from Mexico, which includes avocados, tomatoes, limes, and peppers, and less than 0.5% of our sales from Canada and China. If the recently announced tariffs go into full effect, it would have an ongoing impact of about 60 basis points on our cost of sales.
Mondelez CFO also talking about it. They're dealing with the high cocoa prices, which is aside from the tariffs, but will also be affected by tariffs if they go through. Listen.
We expect an adjusted EPS decline this year given the unprecedented levels of cocoa costs in our chocolate P&L. This decline is expected to be approximately 10%. This outlook does not include the impact of the potentially significant new executive orders imposing 25% tariffs on U.S. imports from Mexico and Canada. This would create an additional headwind to the business, but given the fluid and rapidly changing nature of timing, it is difficult to provide a reliable estimate of impact for the full year at this time.
I think the upshot with some of these company executives is, guys, they're not baking it into their forecast because they don't really have the guidance on when these tariffs hit and whether they will actually go through. So it's not doing that, but they are being more precise about exposures to what they import from Mexico, Canada, China, Mattel. I mentioned Mattel's a big winner. They say China is going to represent less than 40% of global production for toys compared to an industry average of 80%. And with the U.S. representing about half of our global toy sales, our tariff exposure in the U.S. related to China should be about 20% of global production. So we are getting specifics for analysts to start putting into models if we do see these tariffs go through. It's why you see the market sell off on tariff days, because investors have to reassess the earnings outlook on its costs and potential demand destruction if these companies have to raise prices on consumers.
Yeah, well, it's also potentially weighing on shares of Apple, which we'll take a look at now, of course, down about 1.6% on reports that China is taking aim, perhaps, at the tech giant. Eunice Yoon is in Beijing and can fill us in on exactly what may or may not be happening here. Eunice.
Thanks, David. Well, Chinese regulators are reportedly considering launching an investigation into Apple for anti-competitive practices. Bloomberg is citing sources. CNBC reached out to Apple as well as to the Chinese government, but have not yet heard back. So we have no response. Now, the issue is an Apple policy that requires the company to get a cut as much as 30% of all revenues of the transactions on the apps on its platforms. Now, this has been a long-standing point of contention between Apple and its partners, as well as state authorities. In fact, since late last year, state media, including the Global Times, which is a Communist Party paper, have been describing this as the Apple tax and saying that it's monopolistic as well as unfair to consumers. Now, this also comes as Apple has been struggling to maintain its market share because of competition from local rivals and as it looks to seek to get approval for its AI services and to bring them to this country. It also, of course, coincides with what we've been reporting all week, the fact that there are these latest rounds of trade disputes between the U.S. and China. Guys?
The fact that companies are now being targeted, specifically PVH was yesterday, I mean, Apple potentially today. This is a new chapter. I wonder which companies, how worried companies are and who else should be worried.
Yeah, I think companies are worried. They already were starting to become concerned when the PVH case first came about. And then yesterday, it was also Google. People were surprised that the market regulator said that they were looking at Google for anti-competitive practices. Google has a very large market share when it comes to the Android OS. It makes a lot of money here. You wouldn't think that because the search engine isn't allowed. But it's interesting that they are singling out companies, and one of the reasons why this report about Apple has become so important.
Eunice, appreciate that. We'll talk soon. Eunice Yoon in Beijing this morning. Meantime, Alphabet's the other Mag 7 name under some pressure today. The company reports a revenue miss, but more importantly says CapEx spending will be more than the street was expecting. Let's talk about that and Apple this morning as well. Barton Crockett's with us, Rosenblatt Securities senior analyst, has a hold on Alphabet, raised his target to 205 from 193, a buy on Apple with the 263 target. Barton, good to see you.
Morning.
Is the CapEx number at Alphabet the story?
It's clearly a key part of it. I mean, I think it's no secret, obviously, that the hyperscalers are growing spending 40, 50, 60% this year. And that's great for NVIDIA, great for the other equipment suppliers. I think for the services companies, what you need to see is that investment is paying off, that you're getting a return on that. We're seeing that in spades with Meta. With Google, it is less clear because, the acceleration in the core business is not, been what we've seen at Meta. And then there's this cloud of uncertainty. Does AI create the opportunity over time for there to be, more competition in search? You compound that with the antitrust, risk to distribution. And I think there's some longer term concerns that put a capper on the multiple people want to pay for Google today.
Right. But isn't the notion that search kind of keeps chugging along was one of the positives from last night?
Search was certainly a positive from last night. And I'm talking more, bigger picture. I mean, the investment in AI is making, Google's search better. It's making, Meta's advertising better. But it's also enabling people like Perplexity to come in with a search, solution that is, uniquely competitive with, Google. And we haven't really seen that before. DuckDuckGo was not really competitive. So, I think that it's a new world and there's concerns. That was not front and center last night.
How about Apple? How are you sort of calculating or looking at political risk and some of the collateral damage that some of these corporates might absorb?
Well, look, I mean, this is very surprising. I mean, I think we went into this year thinking that it should be like it was last time where Apple was carved out from the trade wars, and the Trump tariffs. And that's not happening and China's responding. So this is right now different than we expected. We do, see that this is a volatile situation. So I'm hesitant to really think it makes sense to jump on any one news point today because, under the Trump administration, it could be a very different news point tomorrow. And obviously no one is really an expert in kind of China antitrust law, but it does feel like this is very much tied in with the trade process. I mean, why are Google and Apple coming up now and they didn't come up, at this level a couple of months ago? And it seems to be the tariffs, which suggests that there's a lot of room for the U.S. and China and Trump and China to figure something out, that sets us to the side because nobody benefits if there's a full-out trade war. And I think they both understand that.
I want to get back to Alphabet. I mean, cloud obviously was up 30%, but the growth rate decelerated. Maybe another reason why there's a bit more weakness in the stock price, not along with that CapEx guide. But they talk about being supply constrained. I mean, again, you noted this. NVIDIA shares are up, Barton. There's no, are your expectations that they're going to continue to decelerate in cloud?
No, I'm not. I mean, I do think that there's a lot of noise in that cloud number. I think cloud is a source of strength for Alphabet, Google right now. Our survey work would say that, IT managers at large enterprises, think if anything, Google is the best position of the major cloud providers ahead of Microsoft, ahead of Amazon Web Services. So I'm not worried about that. I do think that was more noise than substance, that number last night.
So what are you worried about then?
Well, I think that, like I talked about, I think that there is concern about the long-term prospects in search. And I think that puts a capper on the multiple people want to pay for Alphabet. My rating is neutral. My price target's up a little bit, so I'm not negative, but I'm not going to be overexposed to Apple, when we're going through this process of determining what the antitrust outcomes will be and what's going to happen in search.
Barton, it's a lot to digest. We'll keep close. Barton Crockett, appreciate it. Over at Rosenblatt.
Great, thank you.
Here's our roadmap for the rest of the hour. Shares of AMD plunging. What analysts are saying now about the stock following a miss on key metrics.
Plus, Disney beat profit estimates, although they are guiding towards losing a few more on the streaming side in terms of subscribers for the next quarter. We're going to dig deeper into those results.
And a big interview coming. The CEO of Shell will get his outlook for energy demand and prices in production as S&P's lower, but VIX still just hovering around 17. Squawk on the Street's back after this.
We speak to the world's most influential people.
I love what I do, and it means so much to me.
From celebrities.
When we took a break, I thought that was the end of it.
To the C-suite.
I started on the factory floor, and here I am 35 years later.
The economist and author Dambisa Moyo. A lot of boards, many of the ones I serve on, went back to the drawing board to say, well, we need to do better here.
He turned a dream into a global brand.
Join the conversation on CNBC.
Kelly Evans, The Exchange, CNBC.
I started investing a little money from my dad, and I got bitten by the bug. In today's world, I would urge a lot of people to get financially savvy. Squawk Box and CNBC, it is my home. It's the greatest job in the world.
Geopolitical stability, I think, is good for growth. It's good for peace and stability, and that's ultimately good for business and good for investing. So I think there's enough signs right now that I think give me optimism to what's coming.
Trump gives America a really good chance to revive its animal spirits. There'll be less regulation, there'll be more energy supply, there'll be more of a sense of markets functioning and regulation diminished. And I think Trump is a shot in the arm for business.
There's a very positive attitude within the new administration towards the biopharmaceutical industry and trying to fix the overall ecosystem. There's obviously areas of disagreement, but I think overall this is actually going to be a better environment for us than the past 4 years. And the biopharma whole sector has sold off and is really at a 10-year low overall. So I think right now we have to rebuild that trust.